All right, so day five, you guys are still alive. Yeah, I'm aware about the calculation things. I'm just master. Okay, CMC, right? I think I might do an extra training, live training class or something, maybe next week. I'll see through to it. I might do one on Friday because I need it when the market's open, and I hope CMC doesn't go into maintenance again. Okay, I don't know why it's locking. What? Okay, I think there's a possibility that CMC might maintenance again. Right. Now we'll look at that later. Okay. Yeah, I might just do one or two live trading with you guys next week. I'm thinking about it right now. Right. Next week's I only have time on Friday. The rest of my week is completely filled to the brim. So I can't do much other than Friday. So that's the likelihood. So what I want to show to you right now is that can you look at the date here? Can you look at the date over here? Okay. All right. Can you look at the date here? The time. On Thursday, right? What you're seeing here is what we call a transition line. And you can see this pink color line. So for those of you who taken the who did the time trading with me already, remember what I always say about this combination? Anyone here from previous batch? What's this combination called? You have Jupiter and Venus in conjunction. What does it mean? Anyone? Anyone from previous batch here? Okay. If you're not sure, let me just load up the chart first. So on the screen, okay, on my screen, we are going to focus on 4 planets. Constrictor, right, with Saturn, Mercury, communication reliability, unreliability, Jupiter, and Venus. So look at what Jupiter says, expansion, right? And in astrology, right, if you understand astrology, Venus itself is a money planet. It's tied with women and it's tied with money. So not to be sexist to the women here, but that's what it represents. The males are Mars. So that's what it means in astrology, right? So when I was looking through this thing and I saw the news article that I want to show to you on, it was on Straits Times. It's a funny thing, but I can't find the article right now. Right? It might be taken down. So I'm just going to do one last try. Just oh yeah, someone posted it. Thank you. I was looking for this. Yep. So when I saw this thing, this article came out, right? I was like, okay, this is interesting. So they sent a reminder. Yeah, this was what I was looking for, right? I was looking for this. I was looking for this. I was looking at the crossing of the planets at the point. So even though it says this will be on 23rd February, right? Let's go to 23rd February. Right. When there's the crossing alignment, I knew that something was a bit fishy about the whole cycle already. It means that we are about to experience some kind of realignment coming. And if you look at the names around behind this, there's a Moon, Jupiter, Venus alignment, right? When these three comes alignments, It's like a triple whammy. It's a triple whammy basically, right? So when these three come in alignment, right, you have the emotional, expansion, money. So if you look back, if you look back at the markets, right, let's look at back the 23rd Feb, right? We know that there's some kind of expansion happening over here. Can you see that on the 23rd itself, this bar, there's a lot of expansion going on already. Can you see this expansion grid? And this is a cycle that's about to hit. But more importantly, when the op phase finally goes through a transition, which is on Thursday, which I forgot to check about it, right? Right? It's around here. Can you see here? It says that what? Conjunction March 1, right? Right? So we know that there's alignment happening. And the March 1 here, you can see the check there, it says March 1, right? Where's the March 1? Right? This article here, can you see here? I knew that I missed a trade. Because about this 7:30 to 9:30, right? When the alignment start happening at the point, right? This was going to cause some major problems for markets. So now let's look at the minute chart, right? Let's look at the 7:30 9 p.m. chart on the imperial systems. Oh, look at this. So I'm going to go to the event. So there's a pre-alignment is coming in, right? And we kind of knew already, right? At that point. So when it goes to that day, look at 7:30. The intensity is here. You can see the intensity. And there's what we call a transition happening into Pisces and in Aquarius. So there are two major transitions happening right now. Sextile is not so important, right? Can you see this point here? And money expense. You see that? Money expense. So when this happens, and it's a neutral aspect, those of you who understand neutrality, neutral aspect, what does it mean? So those of you taken the 14 days before, what does it mean? It means there's a possibility of an extremely bullish cycle or some form of money expansion going to happen at that period. So now let's screen to the hourly chart, or the minute chart actually. Okay, we look at our hourly first. Let's go hourly chart. Okay, this is hourly chart, right? So Singapore and US is completely 12 hours difference. So let's start plotting the market from 7:30 on the 2nd. I see this point here. You have expand, right? Because it's a neutral aspect, we do not care if it's up or we do not care it's down. We do not care. Remember time trading, we don't care up or down. So now let's draw a line here. Right? A line here. This is 10 o'clock. Right? So the impact starts from 7:30 around here to 9:30 or 9 o'clock. The impact will always take one time factor later. Remember, we always use one time factor later. So usually when it happens, we'll take the next bar, this one. This is an astrological cycle. You see here? This is how we use the conjunction method to actually detect a breakout. How cool is that? As soon as the planets finish its done its maximum conjunction, this happens. And I totally missed it. That's the best part. Cool? Not very often. This is you can say that this is a sequence of a BMM in the markets. not markets, in this is an astrological BMM, but this happens to be on the hourly factors. And that will also influence the daily factor. And that's how you get a reversal bar. That's why on the second, it was a reversal up, right? You can see that there was a touchdown and goes up, right? And this caused this breakout. Because this was on 2nd March. It's cool. I want to show it to you about what we actually learned in the day 11. All right. So there's this is cycle, and this is what we call the connection point. Of course, the ops by 0.2 degrees. If you don't understand ops, okay. What I mean by that? It does, okay. Its effect will last, the effects will stop. On Friday, it stopped already. But it will sometimes lead to what we call a continuation effect, which means that the impact will start happening for a few more days before it dies out energy. It's like something must happen first before it flies. You know what I mean? Something must happen first before it flies. Right? You can see that it started the connection, but this is what we call a weak degree interaction, the op cycle. This is where ops comes in. You can see that I have this word here, longitude and latitude op. So this is where we start calculating the impact. Because when it's under 2 degrees, longitude op, right? When I keep telling people op, right? This is what I meant. This one here. So when I have longitude op here, the impact will start to be felt between the 2 degrees pointer. I did cover the difference in the connections in the main program. What do we count as a main connection and as a sub connection? So as it goes further, right, in the time on 1st March, you can see that the degree angles start to change. Then it goes further, changes, right? It starts to become thinner and thinner. The next day, when the impact came, when it was at a maximum, when it's about to hit down to 0, right? It goes down to 0 degrees, 2 degrees, and go further again, 1 degree, 0.1 degree, right? And at 1 p.m., that's when the full maximum impact hits. But usually we take the one after. So basically, anywhere as long as this thing appears, it can happen between any of those timing. And that's what led to a change in the trends of the market. You can't make this shit up. All right. I hope you see some of the astrological impact now on the markets. This is one example that caused the hyper rally. Questions? Any questions about this? That's why it looks like green all this while. If you look at the first March, right? 1st March really started collecting already. The day before, if you look at 2 p.m. on 20th, 28th. Let's see, 2 p.m. 28th. Yes, yeah, affects other markets as well, correct. Okay. It says that the first energy is felt on the 2 degree marker. I normally don't use 2 degree. Remember, I use 1.6 or 1.7 ops. But let me just double check the impact first. Okay, according to my Imperial system, it says that the impact started at 1:33 p.m. Can you see here? So that's at 1:33 p.m. Okay, This was where the 2 degrees angle strike, right? You see that there's a minor buy, wasn't good enough, it collapsed, right? You see this point here? 133, impact started, not enough, connection not great. Then at the, for me, as I usually do 1.6 degrees, I would normally call 1.6. So let's look at 430 now. So if you look at 430, let's look at impact 430. Right. 430 impact, still not good enough for me. It's still not the main impact yet. So it comes up. You see there's a surge. Right? But you can see the energy started. Can you see what's happening in the structure? The structure, general structure is starting to expand already, right? Can you see that the mouth is changing shape consistently? So this is where we can detect the energy expansion change in attitude already. Right? You see that the expansion energy. Then when it goes into full impact, which is around the 9 p.m., right? The 9 p.m., which is around here. Around here, plus minus around here. This is where the real shit hit the fence. This one. This is where the energy is the strongest. This point here starts from here. And that's where you have a trend breakout. That's why your lows are not challenged. There's no retracement. Cool. We can look at other markets also. So this for Dow Jones. My chart is in Singapore time. My optimize in Singapore time. But I align them with, but because Singapore is exactly 12 hours to New York. It's the flip side. So that's why we can use this for the general markets. I mean the whole market is general. Okay, the energy will come to impact. You know what's the meaning of energy come to impact, which means that usually at the according to optimize to opt, but for us, we use some of them I use 1.6, some I use 2, some I use even smaller 1, because it depends on the type of connection. It's like you bring 2 magnets together and how you're connected between these 2 magnets. These 2 magnets. So I'll explain that in details in the full program, but I just want to just show to you that these things work basically. So if you look at gold, right? Gold from 2nd March, right? At 9 p.m. What do you have? What do you have when the alignment came to full? What is this? What do you see here? Can I draw this thing for you? What is that box they draw there? What is that? What's the bar called? Yes. That is the time. They were asking, we're going to expand. Expand what? Expand money. Expand money. But the question is, expand money in what way? Positive or negative? It's a big boy asked. And they chose positive. This is how you catch the trade. If you look at the first impact, which is on the 28, right? 28 about, okay, let's see, this is UK timing, right? So go back to 28 again, my charts again. This one, so 28. We go to 4, no, it's 430, right? To me, I mentioned 1.9 is not good enough for me. I prefer 1.6. That's my own personal preference. 1.6, right? I will look at the 11 p.m. bar personally. because I prefer the 1.6 degree. So 11 p.m. bar. So I'll look into this one here. You should look into this one. Or go. If I'm talking about a conjunction effect. And that's why I told you guys, I think about a few days ago, I said buy gold, right? And that's how you have the search. All right. So just a bit more information on the recent cycles about how Jupiter and Venus cause a change in trend. This is just one example. Fun? Shall we start off with that? The Fibonacci now? Or anything you want to ask? Please ask now. Anything you want to clarify further? The doji is the hourly doji. Usually it's impacted on hourly doji. I already told you already. I will never look into 4 hourly charts. 3, 6, 3 minutes, 50 minutes, hourly, 3 hourly, 6 hourly, 24 hours, because it's a daily chart. Then weekly and monthly. That's the time zone I always look at. I don't look at other time frames. Not time zone, time frames. All right, so let's move on. Okay, so I'm going to introduce. I decided I'm going to teach. There's requested for CCI today, and I think I'm going to cover zoning, advanced zoning strategies. The King Bar will cover next week, right? Probably on Saturday I'll cover next week. So that one I'll leave this to next week, right? So I just want you to understand that first of all, where's my chart? 6. So okay. First of all markets has a point of certain behavior reversal patterns, right? All market has it. So in the ancient days when people start looking to manipulate nature and start calculating and start understanding certain behavior cycle patterns, we found that nature itself, when things are correlated, there's always a certain numbers that show up. And most people call this thing the golden ratio. Anyone heard this thing called golden ratio? Golden ratio? Anyone? It's said that in the golden ratio aspect is where perfection lies in life. It's also rumored, I can't confirm this, rumored that things that are closer to the golden ratio is deemed more attractive. Plus golden ratio and secret geometry forms the pillar of life. Right. This number was made popular by Leonardo. Da Vinci. And that's where Da Vinci. Right? I'll explain more about Venturan Man in the later part of the program, not today. So Leonardo da Vinci is this dude, right? Who Leonardo himself, right, was this guy who I think came from, not sure, is it? Wait, let me just Google him a bit first. Was Italian, yeah, Italian, right? Who actually went to India to study his system. So a lot of people thought that Leonardo is the guy who invented Fibonacci. It's not. The real Fibonacci was actually invented by the Indian scholars, according to legends, right? Who knows all these things? Can I confirm? I can't confirm. Why? Because Fibonacci, right, was invented in 200 AD, if I'm not wrong. Right? Sorry, not 200 AD, BC. Can I see here? The real Fibonacci itself was actually found out by scholars in 200 BC, as early as that point. So exactly which date, we don't know. But we found that there's a certain behavior patterns when it comes to Fibonacci, and that life will tend to repeat these numbers over and over again. And it can be found in many things, including your face, your arms to leg ratio, and stuff like that. So Fibonacci often seen in the everyday living cells, your flowers, and you. And it was rumored that if you have Fibonacci in brands or anything you have, which that's the secret geometry, many of the modern day brands today that survived, right, they use this form of Fibonacci in their drawings, such as Apple. Right. If you look at other brands, let's look at some brands that use this. Apple uses this. Let's see what else we have. Right. The everyday brands that got popular uses some form of Fibonacci involved. I don't know why it works, but it works. Likewise for Konrad. If you look at the ball, you know, for Konrad, the company ball, this one here, this ball here, let me just show it to you. Okay, this one here, right? This logo, you know, there's an extension tail here, is to compensate the Fibonacci sequence. FYI, this part, the tail part here of this speedball is a speedball, if you can see that, right? Bounce around markets, right? This part here is to compensate the Fibonacci ratio. So I too use it too in my own product designs. And in the olden days, right, for if you're a businessman, when people are still using business cards, many of these people who use Fibonacci will print their card ratio based on Fibonacci sequence. And it seems to work. If you ask me why, I don't know why. Because in the law of secret geometry, when things follow the Fibonacci sequence, just like how cells are divided, life is created, it creates an impact, or it creates living, or it expands or multiplies. That's what secret geometry is when you use coordination numbers. So my only point to prove that this works in the markets is that we use it in the markets to show that we can also multiply our gains in a way, or how it reacts based on its Fibonacci sequence. So this thing is constantly found in nature, and there's a certain rule that these numbers follow, right? Let me find where the rule sequence follow. I'm not sure if I still have it. Okay, I didn't write down. I write down the sequence later, right? The sequence of Fibonacci is that if you follow a certain order, 1 plus 1, yeah, yin and yang is one of them, but Fibonacci works like this. The number will consistently expand, and when you divide down, you try to be as perfect as possible, but it has no end. So if you have, let's say, 1 plus 1 equals 2, right? 2 plus, so 1 plus 1 equals 2. Then you use the next combination, next number. 1 plus 2 equals 3, right? Then use the next combination number. 2 plus 3 equals 5. Then next combination, 5 plus 3 is 8, right? When you divide them down backwards, right, you notice that the numbers will try to form as close to 1.618 when you go backwards. Forward plus backwards, go back. I don't know where I left my slides on that. I have a whole slide on that, how I calculated it. I'm not sure where I left that column. I should type the whole thing down before. Right, so it's somewhere in my one of my files, but I'll look for it later. Right, I can't find it. So important thing is that this thing, when we design our stuff, we follow this law, and it's made popular by Leonardo. That's how your secret geometry comes in the markets, where you get things like this, which you will learn in the main program, the program. All this stuff that you see here, whether it's a circle or not, or where is the Venturan man, as what we see in the picture here, right? Venturan man. Right. You see that there's this picture that exists that talks a lot about this circle and squares. The lines, everything here, they're all Fibonacci sequence. So when I was looking through my research many years back, I found that I was told that some of Leonardo's work will lead me to finding time trading. And one of those things that led me to find time trading was actually this picture. Not asking you to look at the naked man, but rather asking you to look at the way they designed this picture to showcase the knowledge. And you see that the hands here has circles. See if I can find a picture that is a cool one. If you look at this picture further, you can actually see that the entire structure drawing is made of Fibonacci. In fact, why do you think ancient statues are very attractive and they last through times? Like, I think it's Michelangelo. It's Michelangelo. Why do you think there's this picture like this that you see in museums? Why do you think people look at this stuff and it lasts through the ages? The entire design of this is also based on Fibonacci. Right? The entire picture is based on Fibonacci. You can find the Fibonacci version of this. Michelangelo Fibonacci. Pictures like this, you've probably seen it before. The one I just showed to you earlier, right? And the way how Michelangelo's design also follows Fibonacci, including architectures in the past. They all follow these laws of Fibonacci. You can look at this, you get an idea of it, right? So when we take into this concept of ideas and convert them into sacred geometry, this is where the programs get very complicated. You start to see things something like egg of life. If you look at how the cells divide and multiply, right? When they're first created, they all follow these rules. And there's a lot of this involved. So what I found is that when we take the same theory and we apply them to time trading itself, like here, we found that there is a correlation of Fibonacci sequencing to the markets based on, you can say, nature's law, right? Show you one example right now on the charts. Of course, today is the basics. We're not going to go into the crazy stuff yet. But I just want to show you an example. If we were to assume, okay, name me a market, one market. Name me just one market, one random market, quickly, one market. Any market that you're dying to know, go. Okay, S&P. Okay, okay, S&P. Okay. Remember I covered yesterday that we always look at the square box, right? We always look at the square box, right? We always say that there is a point of measurement from the square grid. Of course, the advanced one I'll tell you about this kind of stuff in integration, but I will not go into that today, right? That's the advanced stuff. But we want to state the basics. When you take a Fibonacci, which looks like this, let's say retracement. The one you're going to learn today is based on this. Take the high and to the low, right? It can be here, it can be here. So this is what you're going to learn today. Two styles, retracement and projection. But beyond these things you learn today, right? You can see there's a certain reaction point of how the market go to a certain area and U-turns, right? I want to expand your horizon a little bit more by integrating a little bit of what you're about to see here into the markets. Just a little bit of it, right? So once again, back to Fibonacci. If I were to assume that this is a box, let's say there's a box here. A box here to here, right? The normal Fibonacci traders will take either here to here and measure and project the markets, right? That's what the normal retail trader will do. For those of you who are using Fibonacci, correct? But for a guy like me, I'll look at this, I'm like, let's see where the sequential balance points are. So I'm going to take one example, like let's say a titrates. This is what we call triangle sequencing, right? You can immediately see that when I align these data points, a few interesting price appears on the spot when I do alignment. One is over here. Can you see that? This becomes a natural resistance support point. Another interesting point that when I use this to alignment holding area is that this became a shift. Can you see the energy pillar change here? BMM. And see this BMM cycle here? Through one alignment. Can you see how, can you see this thing? There's a Fibonacci coincidence between these points, right? No accident, right? And then there's what we call a zone of the male-female transitions. So when we talk about male-female transition, we're talking about the change in patterns on what we call the straight and the curve. There's actually male and female to it. More details in the later part of the program, not today, right? But because of this transition, I know that this area here is a transiting point of the markets based on a Fibonacci number or the law of Fibonacci using secret geometry. They're all Fibonacci numbers, by the way. And that resulted in, number one, a good trade like this from a BMA breakout. Number two, a co-balance point over here where the cycle ends. Let's say cycle ends here. And then a natural BMM forms again. This is how we move from a fever point to fever point to fever point using Cycle's law. And we're just using nothing but Fibonacci numbers and secret geometries. How cool is that? And I just pick a random market. You guys asked me to pick a market, I just pick a market. You can't fake this shit up. Right? Any questions so far? By the way, there's a harmonical price point here as well. Here. You see the market ends there. Harmonical price point and a zone tally here. This is a zone tally. Anything below here is an ultra bear. Above is an ultra bull. Trading view, you can't really do this much on this trading view, unfortunately. Trading view, you have the limited version. Yes. You only have the single, you have the what we call the 90 degrees version of it in trading view. You can do that, but very limited. You need Optima to do this. I'll show you how to do trading view later, just a quick one. Right. So how crazy can we go with this? Well, using the same sequence, you do this. The alignment of the entire markets in that cycle using Fibonacci and secret geometry. You can see how the markets realign is energy before it collapses using the 2 points that we randomly selected. They're all integrated. Why is this a turning point? Why here? Why this part before the market collapse? You can see that the market tried to fight to its last strength before it collapsed. Why here? Why it collapsed? Because of the cycle has shifted dimensions. Because if you were to take the same cycle here, let's say I take a cycle here, and I multiply this out, a new cycle is formed. There's no accidents why this is the point. You can see that when I expend the energy, why was this the lowest point here? No accident. Why is there a point here before the market bounce? Because these are the energy points of the Fibonacci in the cycle. Right? Why here buy? Why here? There's a holding strength. So these are the hidden codes that you don't see in the markets. I'm showing to you right now. And they all start from Fibonacci. That's why learning and mastering Fibonacci is a must in the program. Because with Fibonacci itself, you can predict prices and time. Geometry 1, you can predict time. Fibonacci, you can predict price. All right? So understand the principle now that how this can go. That's why I show pictures like this to you. This stuff. We'll come back to this again in the more advanced part of the program. But this is just a teaser and telling you the base of why you're studying Fibonacci now for later. All good? So just note that this thing exists in nature. It exists everywhere we use. And if life follows these points of sequence, it will generate, you can say, positivity, energy, you can say it can multiply things. That's what it means. And if you understand how to use this kind of powers, you can do it on markets, and you always be the right side markets. So now that this is shown, I promise I'll show to you on how to do that roughly on TradingView. So let's go to TradingView chart first. The advanced TradingView stuff, right? When it started doing things like Gann-Fan, you are essentially tapping into a form of Fibonacci already when you do this. This is what I covered to you on, I think, the second day, right? This itself is a form of Fibonacci. It's one form of it. The division of numbers here just shows the sequence of expansion. What do you mean by that? So I'm going to show you something about understanding how geometric cycle works. Let's assume that you have a box. A box, right? This box, if you were to cut this box and multiply them into multi-dimensions like this, 4. You see that immediately here, this is one box to one box, right? Or one distance to one. So when we use things like Gann-Fan, which I taught you a bit of it, and put a line down here, can you see that the number, let's just reuse the things. You have a bunch of numbers here, right? The number that you see here, when you project the energy out or the Fibonacci out, is that when you have 1:2, it simply means that, right, your one ratio distance travel to 2 boxes down. That's what I mean by 1:2. 1:1 means your ratio between the top point measurement to the other end is balanced. If you go 1:3, right? If I draw a third box down here, let's say I take this box down, and then I put it down here. Can you see that it matches here as a sequence of balance? Now do you understand why Gann-Fan has so much of this line? This whole expanding line? Because as the numbers get bigger, the more dimension it has across when it multiplies energy. Does this make sense? So if you have something that is 3:1, it means that the market must cross 3 space of sequence right? In order to cross down one. That's why I always tell you guys, let the harmonics decide, wait for a dimension crossing. And we talk about dimension crossing and we look into the imperial system such as this, right? This one. And you can see the divider lines. This itself is an astrological dimension shift that has a governing body involved. We call it solar houses transits. That itself will influence the outcome of markets or a certain surge in the markets. That's how we calculate events. One of the ways. Of course, the more complicated one is where we analyze the impact and the connection between the bodies and what it creates, like Jupiter and Venus combined together in Aries, you get a certain behavior pattern out of it, if you now read through what it means. Does this make sense so far? So both the astrological and the mathematical sequence of Fibonacci, they use this dimension theory a lot. And we are going to learn how to apply the first basics right now, which I'm really teaching how to apply based on golden ratio. Now, do you understand this? What does this mean? There's no possibility of overkill. The reason why, right, the last 2 years, right, we maintain a 90% accuracy is because the amount of work that we put to give you a signal and the clear signal is like that. We actually put in a lot of work. You'll be like, how come Max only give 1 or 2 signals the whole month? But if you look at me last year, right, when I give 1 or 2 signals last year, right, you notice it's very high quality, the trades, in most cases. Like you rarely go wrong one. Because I'm literally checking the governing cycles of the whole markets before I make the decisions. We are actually very careful. You don't have to go to mind level analysis, right? Because that's in the 14 days one. But you can actually do a rough one and you really get a very high probability already. The reason why I do such detailed analysis is because I want to know the dollar point when the market turns. But that's partially ego. In other words, I'll be like, you know what? On this dollar, on this price, at this exact price, the market will turn. That's what I was looking for. But you don't have to go to that extent. What you need to do is to just manage your risk, right? So that, for example, a Fibonacci sequence is coming. You just take a small little box of risk there and you just try a trade there. Like your pivot system. Remember the pivot we covered yesterday? You just say a pivot 1 to 2, there's high probability that you cross to the other side. You just use a small area of risk and you try to get the reward and just maintain R ratio. You're done. But if you want to go become very egoistic or very like, okay, I must be right and I'm direct to the dollar, right? Or so-called impress people in a way, then yes, you can go to the extent of doing things like the nature's law of cycles calculation, or then you will see that kind of answers. That's the depth part of it, where you know exactly which timing, what time something will change. Yeah. The reason why I'm just showing you the 7 days one, because I'm just showing you how far it can actually go, right? I'm giving you the concept why this works now. Even though you're on the 7 days, I'm telling you why this works, the concept at least. You know what I mean? No, we don't change the line. Once we find the right sequence, we don't change the line. Just like Fibonacci, you don't change the line. So right now, right, we're going back to right now that I gave you the conceptual idea of why this works, right? We are going to apply to the actual markets right now. So I'm applying the basic one to you right now first. So what I just showed to you was like 10 steps ahead in the future, right? But we're going to start in the step 1, step 2 right now. Right? We're going to start doing things called clustering. And we'll start doing things like projection and retracement. This is where we are going to go to right now. Right? Vibration energy itself has relation to this, correct? Vibration energy, because there's a certain sequential level, the number is a vibration number itself, and the longitude distance between 2 planetary points does create a certain gravitational impact that influences how matter change. Note the word matter. Matter is your cells, right? It can be water, liquid, gas, plasma, all these things. Those are state of matters. We are looking into the influence of 2 or more magnetical points or gravitational points interacting that cause a certain surge in motions. That's why when you look at how I plan my webinar, this is a basic time trading, right? This, you look at how I plan my schedule, my webinars and that, right? I use this kind of energy calculation to plan them out. The days that I choose are not accidental. Usually, my program, right, is 3 times a year, right? Because I follow Mercury cycle, usually. Because whenever near the program end, there'll be one major tick that I want you guys to catch. Then if you catch a trade, you make a lot of money. Then the whole program is paid for. That's how I plan the program. Correct. Like I just showed to you yesterday. I just showed to you what happened on Thursday. I already showed the answers to you already on Thursday. There was an event of alignment between these two planetary points. And that caused, and the meaning behind them, that caused the market to go into hyper rally at 7 p.m. or 9 p.m. Whichever you look at, how you look at the thing. I'm just showing to you where the energy lies. And how do you catch this in using the basic version of this. So right now, that's why now we're going back to the base of it. And you still realize that what I'm showing you right now don't just apply to the markets, it applies to your life. That's what I'm trying to show to you. Of course, I'll show you in greater details later on. But now this is just a surface information, right? This will spark your curiosity for this. So let's start the first basic one about retracement and projection. So when you know that when we use the principal idea, right, we always must think about this idea of a square. Since I mentioned about energy of female male, this type of measurement is called the male measurement, the male style of measuring, markets male. This is called market male measurement, markets male measurement. The curvature energy around it, right, in the things like polygon, is female, right? Why? Well, very simple. If you look at how a male body is like, or what's called sexy, male bodies are often like that, right? You're a bit of hum, but it's something like this, right? And you've got the 8-pack, your 8 or 6-pack here, right? It's very straight in line, very straight line, right? This is a male body. And they say handsome, right? What about guys? What do you like? You like curvatures. You like curvatures, right? You like curvature bodies. Okay, my drawing sucks in that. You like curvature bodies like this. So, because this looks like a very plus size woman, not plus size, the very broad shoulder woman. But you like women with something like this. The male, the female. It's nature's law. So when we apply the same principle into the cycles of calculation, when we take a Fibonacci sequence, for example, we are constantly stuck into the male zone always. That's why I always say there's 4 points of measurement of the male part, the basics. And the Fibonacci is no different than here to here. You are taking a sequence measurement. That's what you're doing. You are essentially using the 4 points of measurements to calculate a point of reversal or project a possible point of reversal. That's what it means. But that's where the limitation lies, because you are at a non-dimension calculation stage, non-dimension. Because anything that goes with flow time is really time trading. It's not price trading. You are essentially just calculating the up and down part, price. We call this part price prediction, which is very, very powerful. You're using this itself to predict prices, right? So when we were to take a high and low, imagine now there's a box, right? There's a box here, right? Let's say there's a box here. Here to here to here is a box, right? We are to use here to here to find out what happens here. This is the job. The basic way of doing this for female, right? But it's not accurate on TradingView because of that scaling problem. You need Optima to counter this. Is based on this idea. Can you see that? Can you see that when I do an alignment here, of course it's not perfect, but when you look at the height distance here, when I use these 2 points, why is it coincidentally so nicely aligned to the uptrend here? Who is governing this energy right now? This energy here. Who's governing this curve energy up? the hidden force of the female energy. This is where the female energy comes in to govern it. The rise in that E stage, right? The CET, the E stage, right, is usually caused by the female part of it. That's why when you use a Fibonacci projection, right, the more advanced Fibonacci projection, like such as Fib wages, right, this type that I gave you a teaser that day, like this, right? You see that when we project energy down, you get a certain sequential point of how the market slides and change energy change. The points here, then comes here full energy collapse. These cycles are not accidental. No, both male and female can be used for time and price position. Both can be used for both price and time. They are together. They exist together. There's no difference in male and female, right? Except the point of how they measure it and what they count as a boundary effect. That is the dimension trading, right? But I'm just explaining to you why it works now. I'm just explaining to you the theory why it works first. So I'm going to show to you that if you use these 2 points as measurement on your secret geometry here, right? These 2 points here, right? You can see there's a box, right? We can then say that these 2 points are valid points of measurements to project a price into the future. You're projecting a price now. What price, up or down, I don't know. Correct, something like that. So, something I thought was correct. So, now that you've seen the working behind it, the most basic form to do this thing is to take the box, where you take the low point to the highest point, right? And therefore, miraculously, look at this number here. What is this number here? What is a 618 again? 0.618 or 1.618. What is this? A golden ratio, right? So, but why is it 1? Why do you notice that, right? It's 0.618, right? It's 0.618. Then why is it 1.618? Now, this is something I'm going to teach you that I don't normally teach you the first part of class. But the number representing the 1 is what we call whole. You know, your class, you learn your maths, it's called whole number, right? Right? The one in front is called whole number, right? And this is the ratio of possible turning point. That is why, right, the markets has dropped down here and it found a balance point, right, and go up. A lot of people say that this is market expansion because it goes beyond the 1. But here's a secret that a lot of gurus don't teach you, or they don't even know themselves. The number 1 or 2 being whole is not just a price point of being wholeness. It's also a time point of being wholeness. It's both time and price. That's why time equals price. So when we look at a measurement of, let's say, a circle, right? Perfect. Right. The 1 can be projected around and it consistently stays the same because the female is the same. And this itself represents a dimension factor of a whole unit. Whole unit is about here to here. Right. And what we're trying to say is that, right, when you say 1.618, right, it means that there's 2 whole units in existence here. This is unit 1. Then unit 2 goes below here. This 2 is a whole unit point. So when we project the energy of price out, now we talk about price only, right? You can see that this number, the 618, plays a major support role in where the markets will react. It's not about how many times you track on it. It's you're trying to predict a possibility of where the price goes to. You're trying to predict where the price might turn. What I mean, this box here, this is called Gann box. Gann box. But okay, my Gann box and your Gann box might be different. So if you're on TradingView, go to Gann box, right? Double click on this. Make sure it says shows angles. This one. If you're on TradingView, please use these settings. There are still golden ratios. All good? Okay. You don't have to worry about interpreting right now because I'm just giving you the theory right now first. I just need to understand that, right? When a box go to the other end of the box, right? This is called 1 unit of measurement. One unit. And the 1 unit represents the Fibonacci ratio 1. So if you take this as a measurement, here to here as 1 unit, then anything above here is 1.6. It means that it's expansion. The reason why I had to emphasize on this unit number or whole number is because sometimes the market, when you measure, they'll go up, then you go halfway down only, right? So that's what we call within the Fibonacci zone, the retracement. Then it goes back up again, right? Something like this, right? It goes down, right? So it means that the market has never left the dimension. It's still within that dimension price. It's still within that price dimension. It might be a different time dimension, but it's still in the same price dimension. We are focusing on price now, not time. But you must understand where the price dimension lies. Because this will create a lot of support resistance along the way, where you get those zones like this, like something like that, before a breakout or a breakdown. Your CT does look into this structure, because what I just drawn here is an example of like a CAT. You can say that this is E and T is here. Yes, Sean, you got it already. You can use both to measure time and price, but most people only know how to do it on the price. And we are focusing on price now first. So when you have multiple price points of highs and lows, let's say this is one box here, right? Okay, let's assume that this is one major box. One box here, right? You have a box. Let me just draw a box. You have a box here, right? You have 4 quadrants of measurement of male. Then now you also have another box here. Let's say we take another a bigger box. Let's say we take this box here. This box here to this box here. Because we don't care about time, we are just trying to focus price. You can have 2 or more places measuring the same area here, right? We want to find out what's going on here at this red box. Why that price? Why that price? Why here and why not somewhere else? So what is a way to do this is that you go into your TradingView, you look for something called Fibonacci or Fib retracement. You measure from the box bottom to box top and you project out the price, right? Like this. And then you get a golden ratio here, right? Then if you want to find out a second possibility of a price projection, if you see the price area, this entire box, this whole thing here, right? This big box, right? And you want to find out why here, then you can also use a bigger unit of measurement here to here. And interestingly, if you zoom in where the market reacted on a big box, right? Do you notice that you still got a second golden ratio here? Can you see that you still got a second golden ratio? So you have what we call a clustering of markets. When one golden ratio is here and the other golden ratio is here, do you notice that this golden ratio, the one over here, the big energy cycle you're calculating from, right, happen to form the highs of the markets, or the midpoint of the markets, not the highs, midpoint of the markets. Can you see that this here to here now, the other golden ratio, form some kind of pillar of high or support. That's why the market keep touching, drop, touch, drop, then drop. This area here becomes a conjunction, a congestion. That is where your CET exists. Your CET exists when it reverses on a golden ratio in most cases. And that's when it reverses golden ratio and you use a dual price point measurement, you're able to project a price area of, well, movements. It can also be a form of volume profiling, as somebody asked me yesterday, where we cover volume profiling. So volume profile will actually determine where the box might be. But if you use the golden ratio method, you can actually see where it actually lies in between. Because when something appears big, right, in a big cycle like this, right, you take this box here to here. You can also do the reversal. What if I take this box here to this box here and try to find this one instead, or here? Can it be done? You can. All you need to do is what we call a reversal projection, like this. Then you can see now that, right, a certain aspects of certain number of linearity will be hit. And that's why the price reacts to these numbers. These numbers that are generated here, they are not accidental. The numbers are never accidental when it comes to measuring of markets. They are not accidental. Does this make sense? What about the rest? Anyone feeling very lost already? Because I need to teach you this. This is very important. Okay, maybe I should dumb down a bit the content. Okay, let me explain again. Yeah, I'm going to give you the list now. Right. So when it comes to our program, right, we found that there are the reaction point of these numbers are key of where a price might actually be at. And if you want to guess where the market will react, you need to do backtesting. So if you find that the market tends to react on 618 a lot, then usually 618 you look for opportunity. I'll show you how to look for opportunity after this, right? So please take photo of these numbers. Yeah. So I'm giving you rules now. If you see a market, let's say 236 or 382, right? When you see a market does this, it goes on long, right? It drops out a bit and continue going. As long as it's at a 23 or 38, right? 0.28, this and that, right? This is what we call a bull, a strong bull, right? This is what we call a very strong bull. When the market reacts to this number and you happen to see a bounce at this price and you see the market breaks up again, you know that the market, right, in the near future is still on an uptrend because it's in a very strong bull movement. So if you see there's a pullback, there's a high chance and it goes up again like this, right, that this is going to be a very big bar and the T is not nowhere inside. You see a breakout like this. Okay, let's say before that part happens, like this, right? 1, touch, 2, 3, breakout, right? Like this. You can actually enter along here and take a trend upwards here because this is a super strong trend. So when we see a retracement like this and it does a breakout, these two loss number come in effect, 0.238 and 0.382. This is where we know that the trend is super strong and that the next possibility, the high, will be much higher. And we need to use a big trend. Let's say a big trend here, this one here. We need to use the trend from, let's say here, right? Or a small trend. It can be a big trend. It can be this size trend, like that, this size here. Or it can be a big one like this. Both points can be used to measure, to predict where this will go to. For example, if you take a high to low here, like this, there's a high chance that the market will probably go to here or here. If you use this point here to measure, then you have another set of numbers that appear, right? We call this a projection number, right? Where it could go to maybe here or here. So we really have a range that the market is likely to go to around this area here because you have 2 or more, right? And this is what we call clustering. When two or more areas come together into one place, the market tends to cluster at a certain price. So if this is a 0.88, for example, and this is a 2, and you see that both of them are very in alignment, that area where the market might react and sell down is what we call a cluster zone. But there's another cluster here. There was one 0.6 here and 0.382. Then this is also another cluster. So this will actually tell you roughly where the market price will U-turn at when the market is trending from one location and is reacting on a certain retracement pullback. People are actually looking out for a pullback retracement and see how deep the retracement goes before they take trade. If I see that the number is 0.23 or 0.38, right, this area here, pullback, right? When I see a trend and pullback small, there's a high chance that this will become a super bull. Super bull. So if you look at the area, let's look at the current markets, right, of what happened in US 500, right, yesterday. So let's look at some live example. What is this? If I take this high here to here, can you see that this is what? 1.1, right? Can you see the market is rigged? But can you see when they pull back here? What is this pullback? So if I want to find out the pullback zone, how do I find the pullback zone? All I need to do is to take this point, the bottom here, change color, and I measure the top here, the same area of pullback, and I pull it up. Can you see how the market reacted down? What number do you think this is? What number is this? What number do you see here? 0.238. This is a hyper bull because it's within these two range, but it's on this, it's even stronger. The market pull back here and it charge up further. So if you're a trader and you see this happening and you see a strong reaction at this point here, and there's a sudden buyback, that is where your second entry goes in on long. And if you take it straight here, you know where's the stop loss? Your stop loss will be this bar. Your breakout will be this bar, right? Your stop loss will be at this bottom bar area here. So your risk-reward ratio for a trade like this is here. Your risk is here, 126 points. Your reward is how much? Your reward for this trade is here. 1 box, 2 box, 3 box. No, 1.5. Oh, really? 5 times? So can you now understand that, right? When you understand Fibonacci, you don't have to always enter at the bottom of the markets. But if you see a pullback like this, and you see a strong retracement and a breakout in structure, that is one way you can use this price prediction method to take on a big wave up again. And how do you know whether it's going to be this high, or this high, or this high, or this high? We don't know, right? So that's where we need to reference from the past. So if we use this as one box to measure, we can use this box to measure as a reference, but we can also use the entire market structure as a reference. So if I was to say that this is a reference point, for example, and this is a reference point low, then now I can just take this point here, all the way down to here. So you can see my screen. Here. And I now know that the market actually is here. And there's a possibility that if this were to go into a long projection energy, a very strong energy cycle, it could potentially go all the way to here. No problems. If it's not there, right, that's a high potential, right? It could also go to this potential here. So I now know that this will become a new zone. This area here is a price where I can target my trades to take profit. Because I really ride the wave here, my stop is so small, my stop loss is only like this. I got 5 times return. I could possibly ride until here. And this is where you start trading your markets. Or you go by 1 point, 2 points, you just move stop loss entry, let the market run. Run to where I don't know. But there's a high possibility they run to here. Of course, the time trading component will tell you when it's a U-turn. That's time trading, right? But now we're talking about price trading prediction. So we now know that we are predicting the market prices to here, this area here. If we know when is the expiry of time, do the 14 days program, then we know when's the U-turn, the date, or the possible date of U-turn, right? But this is where we find the price of where it might go to. So we have two confluence of a Fibonacci, and we can back test the area here. Did market react here before? Yes. Did the market react here before? Kind of. You can see a lot of pillars here. So we now know that this area here has a lot of demand. A lot of shorters. If you're going to short the market, I'll be waiting here to short. I won't short anywhere. I won't short here. I won't short here. I won't short here. I'll short here because I plan the trades. So this is what we mean by planning the trades. So if you know that you have a BMA coming and the bar is so big and retrace upright, that's how I always tell people. Sometimes it's better to wait for retracement before take a trade because you get a better idea of where the market will go to. Does this make sense of how you plan and predict a future possible price? One of the ways. And this will show to you that you do not need to enter the market at the bottom to take the trade. All you need to do is to plan your risk, which you use such a small risk, because why? Fibonacci checks out very strong, right? It's either 238 or 382, and it retraces down and goes back up. We know that this is going to become a super bull event. And that's how you bet a super bull on the price prediction alone. Does this make sense? This is very important. Anyone lost? The market needs to bounce, always in the bounce, because the bounce is where the algorithms lies. Why did it bounce beforehand? Why did it bounce here? Because there's a Fibonacci here. There's a Fibonacci, critical Fibonacci point here. People are shorting here. People try to press market down. Because you see, when people short here, right, and the market collapses further, it becomes a zigzag. It becomes what we call twin peak. So this is the CT style. This is the E. Nobody knows what's going to happen. This is the E. If you talk about this in a superstructure, this is actually E zone. You can see where the CT is. If you think this is a T, fine. Then this is a C, and both CTs here. But if you look at it from a bigger point of view, right, this is actually E. The E is here. The E breaks down here to here, right? And it falls down from here. The T is here. There's a big T here. There's a C zone here. Right, something like this. And there's two E's before I break out. Can you see where the CT is now? Even if you count this as a T, a C, then this is still an E. Why? Because the bar is bigger at the bottom. It broke low before it break up. Can you see now where the E zones are? Does this make sense? Remember my rule CT. I don't care how is it, as long as it follows the small box, bigger box, bigger box. There's a CT. And this is where the bigger box is forming right now. Get it? So if the box go downwards, is it possible? Is it wrong to short here? It's not wrong to short there, you know that? As long as your stop loss is so small, right? This is your stop loss. If you short at 1.1, right? And this is your stop loss here. Nothing wrong, you know. It's a valid trade. Even though you lost money or you break even, it's a valid trade. Because you are entering based on the zone structure Fibonacci reversal. Nothing wrong with that. Because this point here is where big boys decide buy or sell. If it fails to bounce, it's just a trend line like this. This is where it fails to bounce. You see, this part here is so straight, right? So that answer the question, BT. Did it fail to bounce? Yeah, there's no bouncing there. So it's just let it run. Let it run. Because the trend is so strong, let it run. Let the market run. Okay, the 2-3 or 3-8 is to determine that the trend is strong. It's just telling you that there's a high chance that this is going to be a super bull, right? Correct. So remember here, the numbers here. If Fibonacci were to go to 236 or 382, it's a strong trend. Anywhere between the 50 to 78, right, is expected mid-trend, mid-energy. The next energy that is coming is mid-power. But if it's 88 or 100, right, it means that the trend is damn weak. What do you mean by that? If you have a breakout and the market comes all the way down here, right? Fibonacci, right? 78 or 88. Usually this is the point. I need to change the notes a bit. 78, 88, right? The next point where it goes up is usually not strong. So you know, if the market reverse here, around here, 88, 78, right, and try to enter long, there's a high chance that this trade will only go to here, or here, or here. Like it go to here. And it could potentially go down even lower. Because the point of bouncing, the depth of it changed the strength. So it's very unlikely that the market will do this. Very unlikely. Very, very unlikely. There will always be a pullback first. Very unlikely to do this. Instead, what you normally do, is this. Let me just find for you that color. What you normally do is this. Go up, go down, pull back up. Then this part here, you pull back down a little bit. If you see the little pull back down like this, right? This part here, because it's like 223 or 38, right? The next bar here will usually end up like this because the pullback is so small. This is what I'm looking out for. Correct. That's hook. Correct. Sean got it. That's hook. That's why when I see it happen, sometimes I'll just issue a BMM. I'll issue a technical BMM. I'll say hook pattern is formed. Go in. Then people will say this is what? People will say, oh, this pattern is called a W pattern. It's called a Gartley pattern. Gartley Max. This is called Gartley, right? I'm like, no. I mean, yeah, technical is Gartley, but if I explain the principle behind to you why this is the W, it's because this is the pullback that people are looking for breakout. Does it make sense now why Gartley works? Does it make sense now? It's all about strength multiplication and analysis. You're analyzing the strength of reversal when the market bounce. That's why you don't need to enter at the best possible price. All you need is a bloody plan that makes sense, that gives you 3 times return. So if a trade happens like this, and this is your risk is this box here, your return is so big, who cares whether you're at the bottom or not? You don't have to take the bottom trades because you can never get a true bottom in most cases. Unless you're a time trader, it's very tough to get a real bottom. Very tough. Get it now? So please do yourself a favor. Take photo of this chart and use it as a reference. Remember, 2.3 or 3.8 is where the strong reversal is. The expected points are 50 to 78 as expected. Any trend that's above 78 is usually what we call weak trend. Yes, Amanda, you don't have to always find the best point. As long as you find 1:2, 1:3 ratio, I don't care. 88 itself is quite weak, but it's what we call the Mercury cycle. Okay, 88 and 110 are Mercury cycle numbers. It's when most people fear the most, right? Okay, let me now let's do a psychology check, right? Why 88 and 110? Why 88 and 110? Now psychology. Why now we use 88 and 110 is because of this. Imagine this. When you see a market breakout, right? Do you enter? You see a market doing this, going down and breakout. Would you enter along here, 1, or would you enter along here, 2, or would you enter along here, 3? Which one will you enter at? Most likely. Be honest. 3, okay? Most of you will enter 3, right? Right? Some of you, or some of you like me, will enter 2. Very rarely we can get 2, 1. Very rare. Right? Very rare you can get 1. Good. Imagine this. You enter at 2 or 3. Now at this point here, you have $10,000 positive gain. But I say, no, this one can go higher, right? So you have, okay, let's say a measurement here. Let's see, okay. You have a Fibonacci here, right? So here, you say, no, I'm greedy. I want it to go higher, right? So this is your golden ratio. I just type it down here. 6, 1.8, right? So now I can see, right? And now here's a 0, right? And he say, oh, according to Max, he say it can go to 1.3. Okay, never mind. If the trend is good and the market is nice to you, it goes here, down, makes you scared a little bit, right? Right now, what do you think is happening right now if it goes back to this level? Your number here, if you're at 2 or 3, your money here might be $2,000 only, right? You start to panic already. 10,000 become $2,000. Will you panic? For those of you at 3, you start panic, right? Some of you at 3, panic, right? Some of you, if you're at 2, odds are, if you're at 2, this price here will be $4,000. What do you think your expression will be? Like this, right? You have this expression, right? $10,000, $4,000, right? The market is nice to you that day. After that, it shoot up to the high, a W pattern, right? And here, both of you guys were making, let's say, 20,000. Hit your Fibonacci target, you get out of trade, close the trade, you make money. Happy, right? So what do you think they use 88 and 110? Here's where psychology comes in. 86.18 is there, right? What happens if this happens? You see this point here to this point, then you take this point here to the reversal Fibonacci. If it goes to 6.8, what happens to those people on number 3? What happens to people on number 3 goes 6.8? The people enter number 3, right? When it goes 6.8, you'll see this as negative $1,000, right? They will worry. Those at 3, right? Those at 2 will see this as plus $1,000. They get this. They're like, ah, yeah, $1,000 left, right? So those of you who enter at the one, and when the market retraces back to the 308 here, this is what you see, correct? But what if it goes lower to here, 78? What do you think 3 and 2 will see? 3 will probably see this as 4,000. This is probably negative $2,000. Right? They will not be worried anymore. They'll be both of them will be worried. Right? Both will be worried. Correct? What happens if it goes to 88? What happens if it goes to 88? And you see that this is no longer $4,000. But what if it goes to 88? This is where people will scream cut loss. Most people don't have the psychological strength to handle this part. And if the big boys see the volume is damn big there, and a lot of you guys are still around, and they cannot push the price up, you know what they do next? You know, 88, they push here. You guys are still holding, right? You know what they do next to you? What do they do next? If too many retailers are here, too many retailers are here, everyone's still holding retailers. Too many of them are there. What do you think they do next? They will push further to 1.1. Then your position, where you're $10,000, you feel shocked, right? Now becomes this. Who can handle the stress where you are making $10,000 at first becoming minus $12,000? And those guys who got a number one, miraculously got a number one, right? They also all become negative. How many people will die at this stage? A lot of people die. That's the reason why we use 88 and 110. We are entering where people die. I only enter people die. People cut loss, I enter. That's why I always tell people, never enter at the start. No, never enter at the FOMO. Because these people here at 2 and 3, what are they doing? You're FOMOing. Then the people who chase after that here, FOMO. You're all FOMOing. So that's why you make a bit of money here, but like, $100, $200, I am happy, right? You're FOMOing. So I always tell people this. Never enter at the FOMO. So always be early or be late. Never at the FOMO stage. You want to enter early here, you enter very early, or you enter late. Never here. This is what I mean by this. Always enter early or late. Never at the FOMO stage. That's what it means. You can hedge your pullback if you want to, but the question is, can you handle a hedging when it goes against you? Do you have the experience to hedge? Do you have the money psychology to handle it? You miss a trade, the market's always there. Get it? But because you're so attached to money, you see this, people, psychology will break because they see positive before they see negative. That's why psychology breaks. Psychology breaks because of this all the time. Even to me as well. That's why, yeah, I don't recommend people hedge. Because the moment hedge, you start to get lost. You start over hedging. You start to buy, sell. Then in the end of the day, like, oh shit, what am I doing myself? Then your whole account blow up. That's why I say don't hedge. As if you are very new, don't try to do the complicated methods. You'll die. Any questions? Yeah, correct. Do you see a psychology in play now? Have you recorded this number down? In a very rare form, we go to 400. Very rare, right? In fact, right now this breakout looks like it's going to 400 or 200. There's a high probability that it can go 400, especially the small range one. The FIBO 400 can be true. Right. So you say, oh, what about 400? Will this be 400? Say, yeah, it can be 400. How? How can this be 400? Very simple. You see this box here? You see this box here, right? This is the box, right? This is the box, right? You got 4 pillars of area of holding, right? So if you take this line here and this box here, can you see right now it's already at 200 something? It's about 200 already, almost 2 already. It's already 2 boxes already. 1 box, 2 box already. 1 energy pool, energy box already. 2 dimension across already. Can you go to 400? You can. You can go all the way, you can even go all the way to, for this kind of trade, right? If the energy is so strong and you want to kill people, you can actually go all the way to here. You see 368, and then you join the resistance point here. You can even do a beyond to join here. Then it's probably 500 already. You can. It's a valid trade. Can it happen? Yeah, sure. Depending what dimension you're using. Do you, all of you need a break now to process all this information I just gave to you? I can feel the burn in the head, but do you need a break? There's a lot more. I'm not done the projection, all this thing yet. The retracement projection, I have not done that part yet. That's why I say I'm thinking you're giving you a break first to process the thing. Come on, tell me the answer. Break or no break? Okay. Give you some time to break process. 15 minutes. Yeah, 15 minutes. I'll give 15 minutes. Come back 3:05. Right? Process this is very important. If you caught that part, I just share with you, you really got your money's worth already. All right, so let's continue. As I mentioned earlier, have you taken this down already? So what I meant is that when we talk about 100, the 1, right, the 1 point something, right? Often when we talk about 1 point something, it's what we call a dimension unit number, right? Which means that 1x crossing is factored in by a dimension unit. A dimension unit in basics means it's just a box with 4 points, right? The advanced dimension crossing is usually a circle, because circle is very hard to find where the point is, right? But circles, right, is interesting because the circle dimension points has actually additional quadrants if you look at it this way, right? You can do diamond quadrants, or you can do a square quadrants, right? This is not what I'm showing you, it's not perfect, it's just an example. So this is something that I will not cover now. Just give you an idea that when it comes to this level of analysis is where things get a little bit too difficult for an average human, right? It takes a while to learn this part, right? And of course, within a dimension quadrant, you can also do a sub-dimension quadrant. Right? Just give you an idea. So this is if you're looking at the more advanced quadrants, but right now we just want to understand that, right, when a price cross from one side to another, it's just 1 unit. That's why it's 1 point something. So if you have 2 units crossing, 1 box, 2 box, it means the price has crossed two units, so it's 2, right? If the price crossed halfway, or so-called 60% of that second box, there is 1.6. That's what I mean by a crossing point of dimension quadrants. Any question on that part? Any question on the unit crossing part, or how you calculate the unit crossing? That's why when they say it's 2.88, that's what I tell you guys, don't worry, it's 1.88, 2.88, right? Or 0.88. Just watch out for these numbers. When the price is about to hit there, we wait. So then how do you take a more trades when the market is, when there's a possibility of entering a trade? What do we like to look out for? So this is where your technicals will start coming in again, your basic technicals. What do you mean by that? So your basic technicals can exist this way. It can be okay, let's say the price, right, has gone up, has come down here. Correct, right? And this is 0.618, for example. And that's this, and this, and this, right? What we are looking for is when this happens, and below here is probably 78, 0.78, and here is 88. As soon as the price stabilizes, you know, there's a C phase and E phase, right? What we want to align ourselves is to look for a possible breakout. If this is a breakout here, right, and it flies up, right, into another zone. Let's say it flies up and it goes and does this. Usually what happens in a chart is that you get a pattern like this. One bar, doji, downwards, downwards. T bar, touch. T, let's say 7, 8, 6, 8, right? Then close above. Usually when we see a close above, right, that is our long signal, which means that your stop loss can be at the 88, can be the 88 point, and then this becomes your risk reward ratio. I say here to here, not the best. You can also use the 78 as a risk reward, right? Because you're looking for after effect. Remember, we only enter when it's early or it's late, never at FOMO stage, right? So if the market were to go up a little bit, push up and drop a bit and go, that is a perfect one. That will reduce your R ratio here by a lot. It'll be here or here, right? Because you pull back a bit. So what we're looking for all the time is for this little reversal point. And once this happens at a breakout of a Fibonacci point, right? It can be a pivot, it's the same strategy as the pivot levels as well. The pivot levels we shared yesterday, right? It's the same strategy. Once you see a reversal like this, then your day 1, day 2 condensed class will start coming in, which means that this stuff here, let's backtrack a bit, right? Your this content will start coming in. That's why I say please go and read this online, because all your methods are here. Where's the oh, it's day 1. All your methods of reversal like this, remember to memorize this or kind of understand this, will come in. And this is where we look for an opportunity to enter the trade using one of these setups. Does this make sense? So when you see a Fibonacci sequence, there's an alignment, and there's a Fibonacci point like this, and you see the bar start to form, then this automatically means that this is a possibility of buyback. So can we look for this kind of trades in the markets? Can we look at the trades in markets? By the way, I can do this at any markets. So anyone wants me to look at another market, any other markets? Just do a quick screen of this. Okay, BTC fine. So it's very fast today. Okay. Rule number 1. Find a box, right? Which box you want. If this is too big of a box and it's considered extension, then of course we can always try to find where you turn. Okay, I see a potential box already. This is not very clean, it's probably 88, but let's say look at this box here. Highest to lowest, for example. We're gonna find this point reversal, right? So we just take the retracement on your apps, Fibonacci retracement, high to low, and just pull across. So sometimes, right, if they don't give to you like this, let's say 618, but it's under, too bad. Can we do anything about this? Cannot, right? But do this happen sometimes? Yes. So in this case, you miss a trade. It's okay. Remember, because the reason why I say it's okay is because a lot of people don't realize that they can do a 50% reversal. 50%, 0.5 is also a number. So if you see Bitcoin having this 0.5, a lot of 0.5 reversal, then Bitcoin's natural is actually 0.5.
All these apps, you see how to delete.
This kind of reversal points are usually 0.5, right? That's for the Bitcoin. So if 0.618 is not respected all the time, then the usual market for Bitcoin could be 0.5. You have to test it out. So let's look at another incident again. Let's say we look at here, right? This to here, this one to this one. So we test. For this case, what is often seen? Not even 1.1, it's only 1 to 1, right? So if you know that Bitcoin doesn't respect the usual Fibonacci, then we have adjust our system based on the fact that BTC doesn't respect that often. So can we look at another incident? So let's say here to here, right? This one, okay, can you see there's dual? There's one that's about 0.8, but it's not even the 78. But then the return part of it, people are waiting to buy here at 0.82. So there's some form of respect to Fibonacci in place. You can see now that, right, once I start drawing a line like this, the market is actually buying based on these numbers. Why is this low here? Why are people rushing to buy? Because it's a retracement here, and people rushing to buy. Is it valid? It is. Right? Can you see that if we drop further, this same area, what happens here? The one constantly gets challenged. But what other things do we see here when this happens? When I see a break, break, break. What do you see this? What is this I'm drawing right now by the 3 arrows? What is that? How much you know this? Law of 3. 1, 2, 3. 3 tries. Higher, 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 fail. Down it goes. So please take note of law of 3s when it comes to Fibonacci as well. Right? The law of 3 suppresses sometime. The line of control is here. This is the line of control, right? If this line of control breaks and the market pushes and go above here, you know what's going to happen? It's going to fly. But law of 3 states as being suppressed. Cannot do anything about this, right? So that's based on when this 21st Feb timing, right? I don't pre-plan any of this, by the way. So you could see that, is there a reversal? Yeah, no, that's a continuation, a retest continuation. For this thing itself, you can say a retest continuation. It's just that some people miss the first boat, they want to try again. They can try again, retest confirmation. So if people bought here, right, see what happened here? We'll just freak out when this happened and go below here. Can you see that this area here? Remember you chased and you bought here, right? But this is why do you think that this happens? Why do you think this happens here? It's because those people make money here. Let's say here you got $10,000, right? Remember? Example here, $10,000. You buy here. This becomes what? Negative $3,000. Right? Can you stand the fact that you're making 10,000 at one point and now you're at $3,000? Can you handle the stress? Then it comes here to this high here. It becomes 9,000 first. It plays you $9,000. Right? Can you see it's lower, right? Then after here, they give you $11,000. If you are greedy and you don't take profit by then, and law of 3 applies for you if you try here, then this $3,000 loss suddenly becomes $4,500 loss. And they give you one last chance if you enter here. Can you see where the chance is? What is this? This is what? The last chance. They say if you don't get out now and we're going to give you $4,000, you're going to lose everything. So you can see that if here you don't get out, right? And here the law of 3 is failed already, right? And at one point you're scared. Here $3,000, here $4,500. You don't get out, you don't plan, you know what happens to Unix? It becomes 7,000 negative. Then they let you try one more time, but they won't let you escape without a loss now. And see, here's probably 3,000. Now 3,000 loss. Here is 4,000. Here's 2,000 loss. Don't want to get it? You hold the trade because you believe in that stupid. You believe in the stupid people saying, buy the dip or hold on the dip, right? And your $7,000 loss becomes what now? If you don't hold, what's this? It becomes $12,000 loss. Yes, high, low, low, high, low is applies here all times. That high, low, that thing is no different than this one. What's the difference between high, low, high in this? High, low, low, high, low, low, high. What's the difference? It's the same box, what? That's why I draw for you the box. What did I draw the box for? Same principle. Oh, now you understand, right? Now you understand what I mean by that, right? Because who said the box must be Who says the box must be who says the box must be 90 degrees? Right? Who says the box must be 90 degrees? Who says? Who says must it be this? Unfortunately, TradingView say yeah, you have to follow because it's too complicated. But for us, we can do this one. My box is like this. What can you do? My box is like that. What can you do? What can you do? I have a box like this. How? My box, I can turn this box into a box like this. Right? I can turn the box into this. How? My market exists in multi-dimensions. How? Multi-dimensional trading will be later on. This is multi-dimensional trading. Right? When we look at the multi-dimensions. This one, not in this program. In the 14 days. Right? So we can do multi-dimensional trading. Then you want to complicate things further, we can do sub-multi dimensions. Sub these. Then you start to realize that, right, you're staring at a square box with a roof, a pointed triangle on top. Get it? Yes. So there's another point of this. It's called projection. So Fibonacci, right? The one that I use the most is also retracement. I use it a lot myself, right? What I just taught you is just find 2 points. You're done. Here, right? You're done. If you use these 2 points, and these 2 are your Fibonacci points, right? Then this is your governing Fibonacci point. You can also use the bigger structure. Let's say here. Let's say this one here to here, right? Here to here. By the way, a trick is this. Because of CT, right? So what I like to do for a Fibonacci is that, right, if you want to get a very good less manipulated Fibonacci points, you always look for T top to T bottom, or T top to bottom of the E of that cycle. This is one cycle, right? Highs, high, lows, low. That's one cycle, right? If you want to get an accurate Fibonacci, sometimes taking the highest high and lowest low is better. So let's say we take from here to here. We project energy out. Can you now see that the market respects 2.5 a lot? But can you also see something else about the markets? What is all these tails? What is all this little tail? What does it mean? It means that the big boy is not letting the market go above that. That's why every time it pierces, it drops. Pierce, drop. Pierce, drop. Every time it goes up and pierce, it drops because there's a big boy suppressing everything. They say you cannot go any higher. We are destroying it. Get it? And that's law of three comes in. But can you see that even when they pierce and drop, right, they still respect a certain level of Fibonacci. The Fibonacci system is being respected. There is a correlation, yes, as well. There's a correlation as well. You can use the Asia high low. That's why King Bar is formed that way. That's why King Bar is formed. And something called mirroring system. I'll teach you after this. Mirror systems. Right now, just learn retracement first. Right? So if you see this high low shit happening, right, we can also do something called projection. So the third style is called projection. It should be this one, I think. Yeah, this one. So instead of using 2 points now, 1, 2, I should use a third point here. 1, 2, 3. And when it comes to projection, right, my usual rules apply as well. 1.1 is what I like to look at. But you notice that 1.1 is here, even though it's here. The low is here, right? It's because they're projecting the numbers from here to here and here to calculate the 1.1 to be around here. The full calculation, I'm not sure. I don't use retracement. I don't use projection much. So I forgot how this is done really. So I'll just let algorithm do for me. Or computer do for me. But can you see that? Can you see how the market respects all the feed points? Now you know why you cannot randomly buy into the markets. You must plan on these points, right? You must plan on the points. You don't buy the market because you feel like buying. I already mentioned Wyckoff is the CT is a simplified Wyckoff. What are you talking about, Sean? I already mentioned that day one already. CT is a simplified Wyckoff. Yes, it's a simplified Wyckoff. Right? So if BTC acts this way, right? Let's say the zone, BTC will have a line of control. Usually these are what we call line of control area. You see this line of control zone. So the line of control is here, or here, and here, or here, right? You can see there's a range of line of control. You see that the line of control often will have a reaction on the same zone. We know that this is a trade box. No. Projection is high, low, high, low, high, low. So for this case, right, if you can see this line of control here, you can do a projection here, right? Here, right? So let's say this how many times you turn? Probably 4x, right? So let's go to the fib retracement here to here, right? This is about 4.2, I think, 4.2. But you can see how the market starts to change strength when 3.6 is hit. You see the strength has started changing already, right? And that 2.88 happened to be the price now, the zone now. So this is where we use a small to project big. Of course, you can also do the bigger one. You can choose to use this one to here. It works. It's up to you how you interpret it. You can also choose to do a short range one. Okay, let's say this to here, right? Here to here. Then you can see the current high is about 1. Strange, right? Look at the line here. I draw a line here. Look at the high here. Fever 1. Is this an accident? I don't think so. You see that? That price is sensitive. And why is it so sensitive? Let's see the past. It's the past price of that. Nope, don't have. Except here, there's one nearby one here. There's a dimension zone here. Very clear dimension over here. Right? So this is where we use a projection, a retracement. And if you want to project the price, and you're going to assume that this is the same area, then you can always project the price there. Let's say here to here to here. Right? So if this is happening now, can you plan trades? Technically, you can. I wouldn't go long yet. I will probably wait until it comes here or here. Probably here, because the reason why there is because here has been retested already. You see here? I don't want to go into a false pattern. In fact, sometimes going for a full pattern is better. The minimum is here. I'll personally look at here or even here to buy. Because this is a pattern. A structure pattern 1, 2, 3, 4. You see that? I wouldn't enter long now for BTC because I'm using structure to determine my rationality of buying. I wouldn't buy. Up to you, BT. Up to you. Both works. You can always, and oh yeah, here's another trick. Yesterday you did pivot, right? pivot plus Fibo on the same level, cluster equals explosion. Another trick is this. The pivot system that you picked up yesterday, if so happen the number coincides or is very near the Fibonacci or the pivot system, there's a high chance that that move there is going to be an explosive move. Because you have the markets, you have Fibo traders, and you have the pivot traders all coming in at the same time. So we like to look out for this kind of coincidences, right? Coincidences together. We call this clustering the markets, or if we use a more vulgar terms, cluster fucking the markets. Basically, we know that that zone is very critical, and it can be confirmed with this other strategy called volume profile, which I'll cover. I'll probably cover now. Cover the volume profile first. Go back to people, right? Okay, so there's this thing here on indicators. It's called volume profile, or session volume profile. Please look for this thing. This is quite potent. If you understand the opening and closing time of the market, is even more potent. Have you found this thing called session volume profile? If not found it, please look for it right now. Oh, got it? It's in your trading view. Done? Okay, good. Okay, what does this mean? Very simple. Please do not panic if you don't understand. Right? So the session volume profile, right, when you do 1-to-1, it's the same like your pivot system 1 day to 1 day, right? So what it does is that, right, according to the data you receive from the provider, it will highlight to you the place with the most demand, the most transaction, buy or selling. It's the most. So this is what we call an area of value, right? A lot of people think that this price is good price. So if the area of value exists here today, there's a high chance that in the future, the area of value will become a new support or resistance zone. You can see here. So what we need to do is that when we look at the area of value, we will see that it's a blip, right? A bump, right? Right? A bump. Like that, there's a bump, like that, right? So this bump is what we want to know where most retail or professionals are coming in. Let's just tell you that this bump is very important. So if you have two bumps, right? One up, one down, let's say another one here, right? There's a very high chance that, okay, sometimes there's another bump in between, then the market will fall to either here or here. You just slide through there. So when you see the price start buying back here, right? Why people buy here? Because the market has fallen. It went up here. There's a bump here, right? You can see a lot of people. Why is it bump there? Because there's a quite number of demand here, right? People actually exchange quite high volume here, but just that this is higher. But a lot of volumes went through here. They want to keep it down. So when they keep it down, the volume area of the scope value is often where you find the market start to equalize. It's like a CT, the C and E phase. So volume profile in a way is a form where you can detect C and E as well. One of the ways to detect C and E, because it will give you the place where people are quite demanding or quite secure of a certain price point. The perception of people will think that that's a good price. But what happens if you have a flush like this? Very simple. You need to watch for the bump of volume, these volume areas, right? Some of the volume is higher, the more sandbags there are. So the reason why I can buy and sell so much and why price moves so much is because the market is viewed like this. Think about the market as sandbags, right? Sandbags. The more people buy at this price, the more sandbags there, right? So there's so much sandbags there at this price, let's say 1300. And the bottom here is maybe 1200. And you don't want to be caught in the crossfire. The moment they clear the sandbags up, right, it flies, right? But because if too many orders are there, what do you think they did to do? If too many people are buying, what do you think people do when this happens? When too many orders are there, they'll snap all these orders down because these sandbags are correlated, right? You buy here, your stop loss is here, right? They smack all this down, and as soon as you remove too many of these sandbags, right? The more sandbags they remove because of the stop loss at all, the easier it is for the price to move up. Get it? The easier price to move up. That's why you always see that at the end of the trading cycle, right? Or something before a big move. Before a big move, there will usually be a tail like this. It's because they're clearing all the long sandbags. They make sure to hit all your stop losses. Right? They make sure to kill all your stop loss here before they fly. That's why they hunt your positions. So volume profile will tell you where the rough area where a lot of people are buying at. So if you're bullish, then you can buy at the bottom profile, up to you. You know what I mean? Manage your risk. So this is one way to determine volume profile. And if you know that this area has nothing here, there's a chance that in the future, the market will just slide through like butter, which it did. Can you see here? Do you see any volume here? Any past volume here? Any past volume here or here or here? Is there any past volume here? No, right? That's why this bar existed. Because there's no bump in the past bars to keep the market from going up. This is one other way to detect the volume of where it lands. In the past few days, has no volume there, and it cracks. It was just sliced like butter because there's not enough sandbags to cushion the impact. Does this thing make sense when we use volume profile? Correct. They cleared out already. So when they want to clear some more, like this one, the one bar alone, right, can wipe out everything because there's nobody buying here. Nobody's just buying here. Maybe some news event, something there. But all your past backs are all there. That's why I don't like to hold the trade too long. And how do I know that that might be a potential drop? Since it's too far already, right? When the volume is too far, like here, it's not effective. Not effective. It must be quite near term. So where this area here is, why is this drop supported here? Was there any value? No. But there was a support price, a resistance price there. Here. Very small. That is a resistance price. That's why till today, the basic, I always say look left, right, look left, still apply. The volume profile will actually guide you to tell you where the look left that is more important. It doesn't have to be the extreme low. It can be the volume of the past, which is, for example, this part here, this part here, this part here. Right? That's why you get a reaction here and here. Because the volume of past influence the future volumes. According to volume profile, I think the drop is not done yet. I think the system will highlight to you where's the most number of volume. I still think that it can drop a bit more. I won't go in there. If you ask me, right, Bitcoin, do I want to go along? Yeah, in the longer run, maybe can. But when I see this thing here, I'll wait for it to drop here before I buy. It must drop and dip and go up, right? Remember, the dip and go up, that's where you want to buy, and that's where I'll plan my trade. So if I plan to buy at this yellow spot here, right, then my stop loss will be here. Yeah, the bumps at the bottom here is the bumps are mostly here. So I got a feeling that if it drops some more, it will go to the bumps at the bottom here. This area here. It may not break the low of the low. It may not break here, right? It may not break here. It may not. But this area, there's probably about 90% chance you have to go there. Get it? Any questions? Visible volume profile. Let's see. Is there an indicator name? Oh, this one? Is there a visible volume profile? Which one? Ryan, which one? It's called volume profile only, is it? Oh, it's a setting, okay. One moment. Oh, okay. Ah, yep, that will work too. Yes, you can use that if you want. You can. Gives you a supply and demand. So if you look at this, it means that this is important. Then if it falls like butter, right? It tells you exactly where the price will be in demand. It's the same principle. Here, 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 here. Yes, it can. So if you see this thing here, it means there's a high chance that it can drop here and buy back. High chance. Can. You can use this method as well if you want. It works. I don't say anything wrong with this method. I think it's okay. You scroll back, it tells you the difference in the zone. Any questions? How many MA is this, by the way? How many you use up to? 70 area volume. Okay. Number was 70. Okay. I didn't play decent enough, so I can't tell you too much. But the idea is similar. You spot where the demand is. Similar idea. And of course, if there's less demand, the high chance of a market slicing at after. Okay, so let's move on. I use the default. Volume central profile, I use the default. I use the default. I didn't adjust it because I don't find the need to adjust this when it's really quite well made already. Right. And I don't use that as a main strategy. I use it as a supporting idea. It's not a main area that I must use. It's just an idea where the market is thinking. That's about it. It's not part of my main strategy. It's just part of those. Oh, by the way, if you want to try this, you can use this kind of things. Correct. I just want to confluence the thing. You call it confluence. You'll notice that, right? A lot of strategies we use measure, they will confluence or they measure the same thing. It's just that different names and ways of doing it to measure the thing. That's what we're doing. Right? Okay. What else we need to do? What else? What new session profile? Fibo. Okay, Fibo's not fully done. Fibonacci. I'm trying to find BTC Fibonacci for you now. Old time for You can see here, BTC last time, they couldn't go to 100K, right? Was suppressed by the 1.1. This is just a classic 1.1 suppression, right? Why is it there? Because this was design and control. This was the thing. False flush, you can call it, yeah. Right. Right now, where is it at? Here, right? It's probably at minus 0. It's probably minus 0. Is at minus 0.2 something, which is holding above the moon, so it's okay. The moon is somewhere around here. The moon was here, right? It's holding above the moon. This is the moon line. The moon line is here, 118,000. This is the moon line. Right? So you can also see that in the past, this high here, this one here, to here, this is 618. You'll notice that these numbers on golden ratio keep repeating. It's annoying. You just keep repeating. Nature's law. So if you have one measurement there, then take retracement or project extension. 1, 2, 3 here. Let's say 1, 2, 3 here. You get the downside, you also get the upside, where it might actually turn. And there's a confluence. Right? Therefore, it leads to this area. Any more questions? If you know how long this can go, another way. 1, 2, 3. 1, 2, 1, 2, 3. Project. Here we go. Then you get 1.38. I think there's a 1.5 here. See if we can do the 1.5 for you. Oh, not even 1.5 yet. So 1.38. Okay, it's 1.38, then stick 1.38. Right? Anything else before I move on? I want to introduce you other indicators already. I just introduced the volume profile. I just introduced Fibonacci trading. And I explained to you why the psychology of why numbers go to certain places. Why is it 1.1? Why is it 0.8? Why this and that? If you are looking for long term, yes. And remember the long, Sean, I told you answer. When moon is above 18, you can go along, right? So question is, why didn't you go along at 18? When I told publicly 18, go along. The moon is there. This answer is here. For you guys, I show the answers. The answer is here. This is the moon line holding the markets. This one, the cross energy section is here. I don't look at the projection here much in the time trading part. I don't look at it much. I just look where the moon is. See here? Okay, I expect it to go here. Cycle coming for BTC. 9 March. 9 or around 9 March is cycle for BTC. There's a moon cycle here. It should mimic on dimension. And you could see a high here to 20th March or a low. I don't care. Just that cycle's coming. The market's about to cross already. The market's about to cross. You see the cross point? It's about to cross over. All right, so let's look at another method. Someone was requesting for CCI. Let's see whether that guy is around. Okay, let's do CCI. CCI. Anyone heard of CCI before? Anyone heard this method called CCI? A method? Okay. Okay, great. So our CCI method, right, is what we call breakout strategy. Right, it's a breakout strategy method. I found that CCIs are good for dual breakout, but you must test markets, right? You must always test the markets for CCI. So CCI, right? We tested heavily on Dow Jones, but we didn't test as much on others. So CCI stands for Commodity Channel Index. Yes, you must trace testing for CCI. You must. Right? The name is called Commodity Channel Index. Now, a little bit of explanation of CCI. Unlike the RSI, where people say it's oversold, right? Oversold, then it's short, right? CCI is a complete reversal of RSI. So let's look at RSI right now, then you see the difference. I don't use RSI, right? If you put CCI and RSI side by side, you notice that both of them, the pattern looks like they got same band, right? They got RSI use 14 to calculate, CCI use average 20, right? But here's the interesting thing about CCI. It's a breakout method, a breakout strategy. So unlike the RSI that will give you false positive here, for example, here's false positive, right? Can you see how lousy RSI is? This one here is false positive. And the time period short here, it went up. So that's what we call false positive, right? Imagine you use RSI here, and what happened to you? Overboard my ass. Overboard. Where go overboard? What do you mean overboard? It's still going higher. Then you see overboard again. Right? You see overboard again. Short. You can see we tried last time, it went up higher. Then higher. Right? Then before it dropped down a bit. So RSI, bad strategy. I would never recommend it. Please don't ever use it. It's not part of our textbook also. Right? I'm just showing you that it's a terrible tool to use. Not great. So instead, what we do is that we to counter this, we use something called CCI. CCI tool is basically a dual band breakout strategy. The CCI number that you choose on the screen, you need to open two, right? Is that one? What's the cycle? High, low, close. Wait, let me just check the settings. Maybe. What's the value? I'm trying to find out the value closing now. So not the line issue. Why can't I adjust the cycle? Okay. Probably have to do this on TradingView. Not TradingView, on TradeNation. I can't adjust the cycles. To TradeNation. Okay, same markets. One, two. Yeah, okay, good. So what I'm looking for right now is I'm looking for what I call overbought oversold indicator. I mentioned before, is to show you where the market overloads, right? So what we do in our setting, in my own settings, that I use the 20 and minus 20. So we use this to gauge a breakout. Even though it's originally designed to be a so-called RSI style, but we change it to a breakout. So how does it work? Like this. Anywhere above the 20 is a signal to go on long, right? If you happen to buy, let's say you happen to buy here, right? Happen to buy here. Let's take a line. If you happen to buy here, right? There's a breakout, right? And it goes below here, hold. You will need to combine both. You need to combine both your stop loss ratio, which your plan, and the strength. So if you see a minor breakout like this, right? A minor breakout, then you need to start forming your bars of area. So if you look at this is the breakout zone, you can use the entire structure of the pass. So let's say here's the structure of pass, right? To guide your stop loss. So if you use this as a structure pass, which means that this whole area, right, will be your guiding tool. Then you can monitor from here and you can do a, let's say a buffer stop loss here, right, around here, depending how much you're doing. If you suddenly see that the thing goes up but suddenly goes down, like here, right, on the 20, it means that, right, if you happen to take this trade and you have a buffer stop loss like this tells you that, right, your decision to go on long may not be the best, right? If you want to cut out and take out, you may. Then you wait for next breakout on 20. You may, right? And by the time it comes here, around here, they tell you short a bit, right? You can reverse the thing and short a bit, up to you. But when you see there's a sudden breakout again, and it's a stronger one this time round, the area here will influence the strength meter of the breakout. So what I like about CCI is that, right, it measures the strength meter of the breakout. And for this case here, you have to once again monitor. So in order not to get whipsawed by CCI is to always check the band zone. For this case here, you don't see any band, right? You see the band is here, up, down, right? So the band is not very clean. But when you see there's 100 here, let's say 100 here, right? You got 20, 100, and 100 will form here. Could you then short here? Technically, yes. The CCI say yes, right? But the market do reversal, right? Is it your fault? Nope. Is it a market fault? Probably. But when you see a reversal like this, and even though a short-lived reversal, right? If the energy were to collapse from 100 to 20 here, it's trying to pre-warn you that the trade cycle is not clean. But once you catch the right breakout, so this method has a lot of try and refer back, right? But once you catch the right breakout, like here, right? You've got both 20, say buy, and 100, say buy, right? You can use ATR to assist you in this also. Then there's a high possibility that your short here that you got tricked into, it's not a fault because the market tricked you into, could then determine that this could be a buy zone. So you might have lost money here once, like this, right? But your R ratio should give you back the return 1, 2, 3, or 2.5, right? You'll still make money. You lost this money, but you make back here 1.5 times, which is not the best, given that they try to stop you out one more time. They're very horrible. You can see this bar here. It's very intentional, right? It's a flush you out. But if you look at the strength index, right? This area here tells you that, right? If you happen to enter along on 100 and it goes here again, it goes below 100, you might want to check out the 20. If it happens to go to here at this point, then maybe you can take out first, up to you. You can hit your stop profit first and wait for re-entry. It's up to you. So this method is one of those methods where you can try to catch a breakout, but if it's not clean, you pull back out first. So you combine both 20 as a form of a confirmation or pre-confirmation, and 100 as a confirmation. Some professionals, when they use this method, they will ignore 20. They will use only 200 and above because they're positioning for long swing. So some of them they actually do 200. They don't use 20, they use 200, which I will recommend you once again to try things out. And this is on 15 minutes bar. So what happens if this is on the hourly bar? Will the number change? Yes, it does. Will we have less whipsaw? Probably. Another thing what I like about higher time frame is because the odds of whipsaw are much lower. So if you have this situation now, where there's a buy here, buy energy coming, right? Is it here? Buy energy here, right? Before this, there was a sell energy and buy. So here, obviously, it's quite terrible to use CCI. But if you look backwards here, it's good, right? You see there's a short corner here, it's good. So it's here. So it depends on how you want to see this method. If you find that this method is not effective, like right now I'm looking at it, it's like, hey, not very good. Yeah, correct. The 2000 is to catch a breakout, but market has been trending sideways. Look at the overall structure, right? It's been sideways. You can't. No, the shadow is just there the strength. The shadow is there the strength. But if you look at a point like this here, let's say here, right? If you catch this breakout here, one here and here, you get very good breakout signals here. You see here? You get very powerful swing trades. Once again, I mentioned it depends on season. You see this part here? Energy is still stable until here. Then it get out. Here it get out. You still make money from here to here, minimally. But this is, like I say, a very good trending method only. But this market's not the best. I like to teach you on basic current markets. But you see here, you get a powerful breakout here. So once again, refer back to CT. The exit signal is up to you. There's two styles of exit signal, two styles. The first style of exit signal is that, right, when the market comes down and breaks below 20 or minus 20, it could be an early withdrawal signal. Right? Some traders will say, oh, only when it goes below 100, then they cut loss. Can you see here? So for this case here, if you follow the below 100 method, right, to cut loss, then the market to come down, let's say come down here, you enter here, right, on long, and it goes up, happy, drop down, you didn't take out here, you didn't cut out here on entry, and it goes below. As long as the markets do not break below minus 100, you can still hold. It's up to you, it's versatile. If you are scared, you can take out first. But you miss this trade. So once again, I mentioned it depends on seasonal markets. Right now, this season for this strategy not clean. In fact, it looks quite terrible. Right? I might even drop this out altogether. So this just one. Yeah, don't use this. It's just a strategy that we develop in the market like this. When the market is trending, very effective. Right? This is effective. Okay, KC will tell you the reversal. So if you look at KC now, right, CCI KC, the new KC method is actually better. Right? I gave you guys the first KC, the new one, right? The latest KC method. So latest KC method was actually, the reversal point was actually a CCI energy reversal method. That's why I say we can try to use the new CCI method, the new KC method instead. That's why I was thinking whether to teach CCI at first. Then since we have requested for people asking for CCI, fine, I'll talk about CCI. CCI was actually adopted from Carol Broodley. This is a lady called Carol Broodley, one of the time traders back in. Carol Broodley is one of the time traders. She does time trading on the momentum multiplier. So Carol Broodley is one of the time traders. So CCI, when I did the CCI, I was adopting from her method back I think 2 years ago, 2 years ago. Carol Broodley. Let's see, what's this? 16. Right. So I need to know where my sources are from. So if you combine CCI in this method, right? The KC, which obviously looks so much better here, right? Will tell you where to buy, much better. The CCI will just confirm that the market has moved, or the market has moved to a certain point. I'm so sorry for this method. Maybe I shouldn't teach this method at all. It looks terrible at this period. So this method here, okay, like I say, don't use CCI, don't use CCI. It's just a request that someone asked me to do it. Right? So if you look at the thing here, the KC will say buy or try to buy. The CCI will say hold first. can consider shorting because KC is a rebound. Then of course the KC method breaks, you do the reversal method and you write the wave here. KC band breaks, right? Then the CCI will say I'm correct. This is where the CCI will say, yep, confirmation correct. You see that now? You combine KC and CCI, this is how you combine, but not the best. I should consider scraping this. So if you're interested to know who this person is, called Carol Broodley. Is it Broodley? Okay, let me get the name of the book for you. One moment, let me find for you. Let's see. Oh, you got a name really good. Caroline. It's both good. Okay. So if you want to know, this lady is the one who she calls herself Fibonacci Queen. Well, she calls herself Fibonacci Queen. So if you want to follow her, she does a bit of time trading. This is one. So CCI was adopted from there, from one of the books, when we were looking at it. If you're curious how I got this thing, right? So the one that I'm looking at is called, I think it's this one, Time and Price. This book. You want to read? You can read this book. I read through the book. It's not bad. It teaches you the Fibonacci time sequencing inside this book. For those of you who don't go for full program, this one will give you the base of time trading. Right? I don't work for her. I don't know her. I haven't mastered her, but she claims that the CCIs that she used there works. But when we look now at this cycle, we're like, maybe I need to reconsider. By the way, this CCI was originally designed for commodities, right? So just want to be clear that this is more for commodities. If you're in the commodity trading, let's try it. CCI on this now. One. See if we can do the same thing. 20. Okay. Much cleaner, right? On the go. Isn't much cleaner compared to the Dow Jones itself? Same principle. Never change anything. Is this much cleaner? Short, go down. Much cleaner. Even if we look at the hourly, okay, they say short here. Now let's test on go. Short here. Right, you can see the cycle enter here. Here, short here, take out here. This one you don't make money, but you won't really lose money. You see that? Then you catch the other end. You enter long, and you catch this breakout. Better now? This is terrible. This is terrible for Dow Jones, but this is good. Any questions? Let's see what happened here. Short, whipsaw. Okay, then enter short. Because the enhanced KC is better than CCI, yes. The new one I taught you guys is better, the enhanced one. The one whereby it breaks the low and reverse the thing is better. King bar is actually better than all this. Okay, it's not -2. One of them I adjusted the period to, one moment, let me just. One is 100. The other one is 20. It's not, they're different. I adjusted the period, the level of measurement here. Can you see here? Basically, anything above -100 means very strong bear. Anything below, anything above 100, strong bull. Anything below -100, strong bear. Anything above 20 is bull. Anything below -20 is bear. So the system will detect early. I'm not sure about that part actually, because I didn't. If you notice, right, in the last, how to say, in the last 6 months, I never mentioned CCI to the public or to you guys, because I stopped using CCI myself. I stopped it already, but I still teach. It's just like Ichimoku. I stopped using it, but I still teach. And I realized that when I look at this thing here, I'm like, oh shit, it sucks. But on the go, it's still okay. Right? If you don't want to use this, it's fine. It's just an extra topic for you to do. But it beats the crap out of RSI in a way. It acts like RSI, but it's better than RSI because it gives you a breakout level of where the momentum is. RSI is like KC, it compresses energy. CCI is a breakout energy. So if you talk about RSI, it tells you buyback, right? Bollinger Band is a buyback, right? Bend buy, right? KC is bend buy, right? But Bollinger Band is up, down, up, down, up, down, right? KC is smooth, right? Okay, no, I didn't use the Winner one. I didn't use that. Personally, I didn't use it. But CCI itself was a commodity channel index. It's called commodity channel index. It's designed for gold. We adopted it at one point to Dow Jones because there's a lot of breakout cycle that period. That's why I look into it. And it was because I was looking at Carol's Budley's explanation. Then I realized it's actually not bad. That at the point. That's 2 years ago, 2 years ago. Now I just move on to do the research on KC. The new KC research and the King Bar research. So the research team actually went towards KC and KB after that. That's why we marketed that as a main product. And after it followed by Fibonacci. Right? So if you don't want to use CCI, if you don't want to use it, don't use it. Which I'm looking at this also, I also feel like, oh yeah, it sucks. Okay, let's see what am I going to teach you next. Should I teach you guys? Arrow of turning point? Well, let me just check the notes. What else I need? Oh yeah, mirroring. Good. Okay, I decided I'm going to teach you guys mirroring. Next, CCI is no good. We go to mirroring. Mirror markets is an advanced Fibonacci method where we can actually mirror a drop size. I want you to observe this length, right? Can you see this length here? This length here on Dow Jones. And I want you to notice something. If I take this thing and clone this thing, and I push it here, can you see that it's very near the bottom of the high to low? You notice that? And when I do this here, the distance change. So when people talk about symmetrical mirroring cycles, right? We call it symmetrical cycles mirroring. What happens here is that, right? This length of the high and low is governed as a Fibonacci length. So when we use the retracement just now, right? We are retracing based on the high-low retracement, right? But what if I tell you today that, right? Instead of using that as a retracement length, we can use it as a guiding tool on the high here. And we use it to justify a potential low. If I were to reverse this bar here, it's actually 1.1 trade. So I take this bar here to here. Yeah, it's about 1.1 in length. So what this does is that, right, if you're doing a symmetrical mirroring strike strategy, right, you can take the length here from this new bar. You can also guess the next bar. You can also use it to guess the next bar. Because they are doing 1 strike, 2 strike, 3 strikes. And the reason why the market does this is because they want you to have the legs, right? We call it legs yesterday, right? They want you to have the legs when you do this. right? So when we found that the legs are running the same patterns, and there's a symmetrical mirror, because we call it symmetrical mirror here, we found that this will confuse the retailers, because the retailers are doing this, right? This is what the retailers will do. Then it makes no sense. So what we do instead is that when we find two legs column and happen that something is mirroring, we want to dimensionize it into a cycle, a point of what we call a guiding energy cycle. This happens because on the planetary cycle, right, there is a guiding energy like this, something like that, right? That's why there's this up and down. This is the real answer, right? Something like this. It's a planetary movement. But since you guys don't have the planetary movements method yet, what happens is that when we plot the thing, we want to plot to a point where we can guess at which stage of the planetary cycle would the market react. And from there, we can also plot using a more advanced Gantt-fan to point a dimension shift. So let me show it to you on this. This one is good and powerful, complicated, and it's not an indicator-based method. So let me show you an example here. Okay, let's say I like these 2 points. Let me show it to you now. And I want to do a symmetrical mirror. Because this is a mirror, right? I see 2 mirror points. 1 strike down, 2 strike down, right? I know that these 2 points are mirrors. If I were to find a constant mirror, I like the mirror to have consistency in the backdrop. If I know that's a good mirror, right? You can see it's consistent. And when I plot the upper mirror length, I'll have 2 choices. When I clone this thing up, I'll either use this thing here or I'll use the shorter mirror. The place that the mirror respects more support zone will be the chosen mirror point. Can you see that this thing here, if I zoom in now, right, tends to have more price zooming in. One here, one here, one here. This one not there, right? Compared to if I use the other one, which is only slightly different here, and I mirror in, the distance between the price point is a bit further away. Can you see that? The bottom one, I get more zero prices. So if I know that this mirror is there and this is the dimension phase, what I can then do is I can choose this mirror point, right? And I can bring this point anywhere I want in the slides, anywhere in the cycle. And I'll get a rough idea where the dimensions are moving in the markets. And because I have one fixed area, I can then multiply this upwards here, right? And I can do the same thing. Take this thing, clone it, and move it here. Once the moment I start cloning and mirroring the cycles, you start to see that the markets will start to do a parallel energy. And I'll just do a quick test. Is this parallel enough? Is this good? Is this touching enough? Not touching enough, don't use, right? This is so. Never mind. Let's look at the back mirror. One here. Now let's mirror it backwards. Yeah. Okay. Did the market mirror nicely here? Not perfect. We test one more. If too many of them do not align, we scrape the mirror. So this mirror here, we align this thing here. Let's see. And remove the mirror here. Align, not good. So if this mirror is no good, we scrape it all together. We look for another mirror to align. So let's test the thing now. Let's try to find another mirror zone that does quite a fair bit of mirroring. Two points. Let's say this thing here. When I move it here, it's an extension of 0.2, 0.3, around there, right? 1, 2 points. Not the best. Let's try this one. Okay, this one here. I use this one instead. This one better. So if I find that this is a mirror that I like to use, then what I need to do next is to find two legs again, and I'll then plot a new mirror out. So if I like this thing here, and if I can find a use of here, so let's say I try around here, right? There's a rough mirror here, length, okay, kind of, not really, but kind of. Take this thing here, I move it here. Was there a mirror level here? Yes. Can you see there's a harmonical cycle? Here to here. This is a fixed harmonics, right? Even though this thing here, this thing's here, but when I move it here, what happens? The top corner here is a line. So I now know that this mirror is a better potential mirror compared to the others. So we want to test this way as well. We need to use the dimension grid test, where we take the mirror here, we cycle it up, and it matches here, we know it's correct. So if I like this mirror, and I think this mirror is something that respects the market structure a lot, I can then use this as the main mirror cycle. Like this. Right? And when I look back in the history, did it kind of respect here? It kind of, not the best, but it kind of have the supporting structure here, which means that this old mirror, and this quite big mirror actually, right, is working. So if this mirror is working and it respects the other structure on the length, now we're talking about the distance length, right? What we need to do next is that we can plot the cycle of the markets. So we come here, plot this out, then we put it out here. We see this point here. If we like this angle, we take this angle, clone it, we move it here, then we test the cycle. Now, does it make sense? Let me run again. Does it make sense? Yep. Can you see how is the line? So when you have a mirror cycle like this, right? What's the advantage of using a mirror cycle? Very simple. The mirror cycle will tell you that anything above this line, you buy. Anything below this line is short. So if you happen to be trading on a mirror of the markets from the past, let's say here, right? And you know that the bottom mirror is somewhere there at the bottom here. You know that the market's chances of reversing to here is very high. So if you are taking a trade, let's say here, and there's a breakdown, there's a confirmation short, right? Because of the mirror cycle at the point. So one time you try, you short here, it goes back up, it kicks you out, right? Never mind, we try again. Wait. We look at a buy, we look at buy here. Remember, okay, let me just repeat this. Okay, let's look at a historical case. Let's say you short here, there's a signal short. You short, right? Then you use here as a stop loss. If this is R ratio, then your R ratio will be like that. Small little R ratio, right? If it's more than 1, stop loss entry, right? Same rules apply. If you cannot get this breakdown and the market choose to reverse back and go above and close the mirror, what you need to do next is that, right? This is on entry stop out, right? You will reverse the mirror cycle. You enter on a long instead. If your stop loss is thin, let's say here, around here, this will become your risk zone, your risk zone, right? But you can see that the mirror moves upward. So as it goes upwards, right, you must follow the mirror up. So by the time it comes to day 3 or day 4, right, there must be a certain level, usually 3 days, where we use the stop loss to entry because the market is trending up. Because the mirror is moving upwards, right? You must trend to get the markets. Because if the mirror does suddenly break through, like this here, break through, right, close below, it will just collapse. So this is how we guide and trade using a mirror strategy, where we can use very tight stop loss. We follow the mirror trend, and if we trend 3 days, 4 days above the certain high, there's a potential breakout. Does this make sense? Means that the stop loss here will trend up. After 3 days, 3 is a cycle. So once it comes to here, let's say here now, right now we short here, right? Mirror close below the mirror, we short, right? We will have a stop loss around here. This is our stop loss. So right now, if you are a mirror trader and you're on this trade, you will be shorting the markets right now, and you probably have a short, you'll probably have a distance of a risk reward like this. And because the market is going up still, and looks like the market is going up, your stop loss must be an entry by now, because 1, 2, 3 days. The third day is flush already, right? Law of 3 here. And now the markets could go here, or if it's successful, you will flush down to this mirror here next week. This is if you're using the mirror strategy. So what I like about mirror strategy is that, right, you can get very, very tight entries on daily, but you can get very, very critical returns. That's what I like about this. Because once you catch a breakout like this, right, you see a mirror breakout like this, your returns on one successful trade is not 1R. If this is your risk, right, and the mirror starts to move along the lines, your returns can be about, this is how much? This is 300 against 2,400, 8 hours. The mirror strategy can give you 8R returns, but there's a bit of trial and error sometimes. So this is the mirror method. And the mirror method is just a back testing. You don't have to take exactly the next mirror point. Some people will use the mirror point halfway. Like Casey, you do the mid mirror point like this, something along this area here. Then you have a sub mirror points. Because as long as the angle of cloning, when you clone it, right, it matches on all the bar as the fixed ratio, then the mirror or the symmetrical strikes exist in the field. So no matter how you twist and turn the markets, right? Let's say twist and turn here, twist and turn here again, here, and you do another mirror down. So you take another mirror here, right? You can see that the market has gone into a different dimension, and that you can trend against a breakout. So if you see a breakout here, you try, right? Then you break down, you short, right? And try again, right? Once you try the third time, 1, 2, 3, you catch this big breakout. But this method is a long swing method. It's good for investors. Any questions when it comes to mirroring? You can mirror on hourly as well, but not a bit more complicated. This is for swing trading. We call it symmetrical strikes. Market symmetrical strikes. Whether your stop loss and this and that will trend against with the markets. Any questions? Another one here. You see here? The trend? It governs the entire market. This is the Dow Jones version. Where is the mirror? Pretty? I'm surprised no one's asking a question for this. This is when the mirror is there, you break down or break up. Are you guys not surprised? I'm surprised that you guys are quiet. Any questions? I'm showing you how to find a very good price point to enter a trade. I use KC, KB, and mirror and dimension, and I use the time trading stuff the most, and of course astrology. And this is one of the methods I use to know the direction of markets. So yes, I'm showing you what I use. I don't use CCI. Personally, I don't use CCI anymore. I don't use CCI. I don't use Ichimoku. I don't use RSI. I don't use MACD. Okay, that's a good question actually, Amanda. Okay, so the mirror. Okay, here's the thing about mirroring. The mirroring usually doesn't care about the C, E, or T phase. The reason is because, right, if you happen to be mirroring on a C phase, sometimes the C phase, right, because it's at an angle. Can you notice something different about this? It's angulated. It's an angle. So the C is straight. You notice the C phase is straight, right? The CT is always straight in the box, right? The mirror will actually angulate the markets for you in a way whereby instead of taking a C phase down, you will actually short the market earlier than most traders. For example, here, right? Traders will short the market when the C phase breaks down here. This is an entry for short. For this phase here, I will be shorting the market here. I'll be shorting the markets according to the paradigm meter, the mirror. So if I have a mirror point here, let's say I use a mirror point here, somewhere around here, for example. You will enter here to short, right? I will be shorting from here. My stop loss is tighter. And if I catch the trade, it's explosive. That's why this is a better method. And I use this. So sometimes when my time sequence tells me that this is a time bar, and I know there's a mirror in the place, that move is a BM, I'll usually issue BMN5, sometimes even BMN10 to catch a trade. That's one of the tricks I did last year using this method. Powerful? Sean, that is day 10. Right? That's day 10. I'll teach you. I'm trying not to teach too much at one go, so you know what I mean. So this is the symmetrical strike methods where we can find commonalities in markets to take a trade, and it mirrors the thing. Another thing I like about mirroring is that, right, if the market were to drop a certain amount, let's say drop here to here, right, for example, I know that the next time it drops, I can already guess that they're using this area as Fibonacci. So if I take the mirror high and mirror low, right, what I like about this is that, right, when I take the mirror high and mirror low of the high and low of the mirror dimension, I know that they will follow the mirror point of dropping. They will not randomly choose the drop one. That's why sometimes your Fibonacci will go off course, right? It's because you have an over high, over low. Okay, let me show you an example. Let me show you an example. Okay, let's say we chose this mirror, right? This mirror zone, right? I now know that this mirror zone, this high to this low, is a mirror point. This market will drop on average, high to low, 4,666 points on average if there's a breakdown. So if I know that this is the average drop, 4,666, right? What I'll do is that if I happen to see a sudden spike down, I'll put this 466 over here at any of the high point. Then I'll have a gauge where the price of the market will go to. For example, here, can you see this yellow line? I know that this, if I'm shorting here in a mid-mirror point, and I know that the dimension is 4,666, I know that by this area, I must get out already. Even though it's not a complete mirror of this area here, but because we are using a dimension of the previous mirror of the market, I will use this as a guideline. And this 4,666, right, will become my Fibonacci high and low. So anything that does, let's say, I take this number here, 4,666, right? And what I'll do is this. I'll take the Fibo high, low. I'll get the value of this area. I'll take the high to maybe 88, around here, right? I know that the 88 value is 414. And I will also take the 618. So I know that if I see a big bar drop that is 2,800 points drop already, I will not chase the mirror trade, even though it's a mirror. I will not chase it. So if I take these 3 points now, I change the color so you can see the difference, right? This is 88. Okay, I use this as, this is 618. So if I take the same bar now, the blue is the full drop size, right? If I were to take this high and low, and I take the 88, I will know that this area here, by this price, dangerous. But in fact, when I see an uptrend like this, I'll get out. Why? Because the 618 mirror has done its job. Can you see the high here to low here? It's 618. So I will know that this is where I must exit. If I see a trade like this, let's say I see a trade like this, and if I want to chase, I will not chase a trade. I'll be very picky about my trade. I'll show you. Can you see here? 618 ratio here I will not chase until I see a potential reversal. Then I chase in. Or I wait for the dimension, which is this line here, this one here, to cross. Then I will use this area here, this high to low, as my measuring point. So if I take this high low here, I measure here, I know that this potential price may not be the full mirror, but it can be here. It can also be here, or it can be based on this price here. High to low here. And this is one way how I try to zero in on the price. You can see how the price reacts. It's very near to the zeroing of dollars. That's why sometimes I'll miss a bit by dollars, because I'm symmetrical mirroring the parallels in the dimension. Does this make sense? Does it make sense? So now you understand how to mirror the markets, how to do a symmetrical strikes on the markets. And this is done on TradingView. Yes. The optimal version is the tetrate one. It's where we do the square and reflect. Right? So the optimal version, right? I'll show you the optimal version. The optimal version includes a time but fixed dimension. So the advanced mirroring is a planetary. This is advanced mirroring. So what you're seeing here is advanced mirroring. Is where we use the planetary cycles to determine the mirrors, right? So I'll give you an example. Like, okay, let me show you one example. Let's say I want to mirror this trade here. I like the system to mirror for me. So what I'll do is that I'll just go here. Show you where's the cycle mirror. Where's my cycle mirror? Okay, this one. This one, can you see that when I press the button, the optimal auto mirrors for me already. They will do a calculation for me automatically. Can you see the price in here? Automated. This is the advanced mirroring, the one that is the optimal version, right? I can come here and say I want to define it. I say I don't like 10, but let's retest the mirror to reflect as, let's say 8. Let's try 8. Not nice. Never mind. We try 11. 11 sounds better, looks better, right? 11 looks okay. The high is not good, but the low looks quite nice. But then they really suggested to use 10. They said 10 is the best because automated. So if 10 makes sense to them, I can also do a sub mirror 5. What I'll do is I'll do this, paste here. I'll say, okay, let's see 5. Mirror 5. Well, not so pretty, but I get a sub mirror dimension, right? So if I don't like this, if I find it's too noisy, I'll delete. Then I'll say, okay, if 10 mirrors is not bad and I have a breakout from all the bars here, right? I can form a strategy here, break down, break up, break down, break up, right? You can see the mirror point. I can then do what we call a cross mirror on the optima, which is right. It's just okay. Yeah, this is quite good. Cross mirror is accurate, right? What I'll do is I'll do a reflection. This is a cross mirror reflection. Can you see how the cross mirror for me? And what's interesting about cross mirror is this. Because I know the dimension time phase, right? The more advanced one, I will know that the mirror will also react on these points. Can you see the governing points of the markets? I know that the mirror also react on these points. So the one that I show you is the first step. The advanced one is this one I'm showing you right now. But this one you need special tools. Even I cannot draw for you. I will know that in a sub-dimension curvature energy, there are sub-mirror points here and here. These are the zone of uncertainty. So what I like to do is that if I catch a crossing dimension point, right? So let's say here, and if my market had to touch this mirror, it didn't break through this and it crashes down within these harmonics here, I will just short the shit out of the market here. And that's how you catch one side to the other side of the mirror here, and below. This is the advanced one. This is what I'll teach you guys for those in the 14 days program, how to do this properly. And it gets more complicated than this. Does that answer the question, Sean? So what I taught you now is the foundational strategy of mirroring. This one. This is like the baby steps. This is baby step mirroring. But you can see the principles are similar. And I already told you the lines are never straight. There's actually curve. But this will give you a guide. So if you look at this case here, right? Like why do we use a buffer stop loss? Why I say must use a buffer? It's because in the real markets, this curve is like this. The curve can be like this. Can we go up, come down, go up, come down? This is the real energy. It's never straight, it's all female. Straight lines are male, it's all female. So that's why you have this stupid curve energy here, right? You can have this thing here like this, like this, like this. You have this point here and this point here. Because that can only be shown and is used by a planetary movement over here. The curvature energy is from all this area. That's why you have the touch and go at different price points. Get it? You can see that if I draw a straight line here, if I do a mirror here, from here to here, it's like this, right? This is what you do on TradingView, right? You realize that there's a gap. Why is there a gap? You ask me, Max, why is there a gap between this and here? Because the green line is the real line. The one on TradingView is the guiding line. It's not a real one. So if you want to use a TradingView, you must have a buffer zone that if you short here, your stop loss must be here as a buffer zone. And this is your risk. That's it. But because of the Optima, we can use a slightly tighter stop loss. That's the method. Any questions? How does the brain feel when I told you about this? Since I teach you symmetrical strikes now, how do you feel? Any questions? Seriously, any questions? Optima is an analytical tool. You cannot, it's not integrated to trade. It's not. It's a quant analytical tool too. You'll get access to this. Is your head feeling very heavy from this? Seriously, is the head feeling very heavy? Okay, so can I make you master the first one first? This one first at least. I can show you another market example of how this mirror works. Any other market requests for mirrors? Okay, give me one more market for request of mirrors. I'll show you the TradingView version for mirrors. Go. Okay, fine. So you must understand now that there's always a mirror cycle, right, involved in all markets, right? Right. There's always a mirror cycle, and this is the mirror examples I just gave to you. So for Go, let's look at Go mirroring. Sure. First of all, I would like to find out where is a leg point of mirror. So what I like to do for a mirror like this is that, right, if I found areas of outstanding, once again, the same box theory apply. You can see that here to here is a box, right? Which means I know that here, 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 here is a box energy. I'm not showing the other method for the GAN one yet, because if I show the GAN one, you're going to scream. That's the next step, right? So I'll teach you a more advanced mirroring after that. So if this is a GAN mirror, right, and this is the point of Fibo. So what am I going to do next is that I found what I like. I'll just set the first mirror first. So first mirror, extension, line, okay, too near. Okay, let's say use this. Test this as the mirror. So if the mirror is bottom here, I must mirror top. Say mirror top here, right? So we now know that this length could be the average mirror factor. So we take the length of here to here. Let's say here to here, right? So if based on that mirror factor, I know that $200 is it $2,000 is 2,200. $200 is a rough mirror face on the Go dimension. is $220 is the average gold mirror. So right now, if I have an average gold mirror as $220, I now know that harmonics is this harmonics number for gold. Every 220, there could be a harmonics change, right? This is how to get a constant harmonics. So what I need to do next is I need to test the next cycle here. If I take the 220 and put it here, and I just mirror over here, right? Say around here. Can you see that this thing is respected? If I zoom in, is it respected? Yep, kind of, plus minus, right? So I'll take the next harmonics here. I'll test it again. Over here, right? So, is there a good trade here? Can you see here? This is a good trade. Is there a breakout here, a CT breakout? There is, right? See the mirror break and it dropped like mad. What's the distance between these 2 points? Can you see if I draw a mirror here, high to low? What is this? It's probably a Fibonacci 88, right? Yeah, I know it's 2 to 20, but we are using a Fibonacci sequence of this. So if I get a box, let's say I use a Gann box here to here. The Gann box already tell me already, this is about 88%. It's about 88. So if I see the 88, I'll show you the 88. Let's say here to here, right? Should be the other way around. Should be the other way around. Okay. Right. Can you see that? Interestingly, what is this? What is this? What number is that? The mirror coincides with the Fibonacci 88. Is it an accident? That there's a 0.88 of the 220. Accidental or not accidental? Is this accidental or not accidental? Was it rigged to happen? You guys there? It was rigged to happen, right? Correct. So you can see that if I use this as a mirror for gold, the line here, I now know that this 88 point is the actual gold mirror or the Fibonacci version of the gold. So I'll put it here. And remember what I say? 88, I'll also do a 618 as a no go or no go mirror. So I'll do another one here. This is define whether it dropped too much on the parallel or not, right? So I have 3 types. I have the 88, 618 Fibonacci of the mirror parallel. So once I have this mirror parallel, and I know that this is constant, right? If I like this gold mirror, what I'll do next is the same thing again. I'll come and take the full sum. I'll clone this, put it here. Then I'll once again do a mirror. Right? Is this pretty? It is. Even though it's not a good trade, but can you see how the market reacts and sticks close to the mirror? Right? I know that the mirror is still active because it's sticking to the mirror zone. And if you take a shot here, can you see if you want trade here, you exit here, or by here must exit really. Can you see that the mirror strike there? Good. So once that happens, we'll take this thing to clone out again. And as the movement of time move forwards, you can see that time is moving forward, right? Once you find a good mirror, you can mirror all the way to the current side. So now we're going to mirror again. The market's here. Very pretty. Look at this. Instantly, the market drop. Right? Instantly, market drop. Instantly, market supports at the mirror. So I know that this is a good mirror. Right? You may not find any good trades in between. You better try to short, hold and this and that, and you might not hold it. There is another method here where we can use Gann box to calculate the zone mirror. So there's something called zone time mirror that I teach in time trading, where we have a time factor over the zone. So that is the Gann box method. I'm just thinking whether I teach this or not. Yeah, right. Well, how to get this zoning here. Yeah, so when we test the mirror, right, and we know that if the mirror reacts very nicely, we know that that dimension or the number that we use 220 is a very critical vibration harmonics of the entire market. Note the word vibration harmonics, which means that the market will keep expecting the number 220. So if Dow Jones constantly do like, let's say 650, then the 650 is a constant vibration harmonics. So if you look at what Gann said at the start, right, there's this big hint, right? This is one of the ways I'll get the vibration. Let me show it to you. What I read to you what it says. Where is it? Okay, I read to you this thing. Then you go ahead. My calculations are based on cycle theories and mathematical sequences. Does it sound like the mirror is one of the mathematical sequences? Maths is the only science. All power under heaven and on earth is given to men who masters the simple science of maths. Is finding the 220 difficult to find? Not really. Simple, right? By knowing the exact vibration, 220 is like a vibration, right? Of each stock. Note the word each stock. So everyone is different. I'm able to determine at which point each will receive support and what point each will receive resistance. So by knowing the exact vibrations, I know that when each will receive support and each will receive resistance. Can you see the difference now? Does it flow into you now when I read that statement to you? Vibration is fundamental. Nothing is exempted from this law. It is universal, therefore applicable to every phenomenon on the globe. Does it make sense? So if I'm showing this to you now, do you see when it comes to sequence or the price sequence? There's a time version of this, but I'm showing you the price dimension sequence of it now. This is a price version of the harmonic cycle. It's still within price prediction. But you know when exactly the market will receive support. And at any of these point zones where the market touches, it's where the major support or resistance will be at. The time factor method will tell exactly when. That's why the optimal version is even more critical, because that one will calculate the interaction of the gravitational cycles between two planetary bodies. But this one doesn't. But this itself already tells you the harmonical vibration. Does it make sense? Can you see the support resistance? Point of harmonics. That's why I use this. Get it? No, that's why I use this. This is not my saying, this is Gann saying. But this is one of the research that we found out along the way 2 years back, 2 years ago, we found out about this. That's why 2 years ago I started teaching mirroring already. But I hope you guys get it. Yeah. Note the words. Note the words. What does it say? By knowing the exact vibration of each individual stocks. So it's up to you to determine which one is the one. You have to calculate it yourself. It doesn't change at all. Once you find the vibration, it will never change. So if 220 is a vibration point and you use the right vibration area, it will never change. It will always be a multiplicative factor of the vibration. Because when the stock is born, that is a given answer already. When the birth of stock is born, is there already all the way. Just that the problem is that, right, you must adjust it once in a while because the number 220 may be wrong. It may be 220.5. So if you do 220.5 consistently in way too many times in the future, the 0.5 of averaging will cause the accuracy to drop because you got a slightly wrong number. So that's why we recalibrate the system once in a while. We recalibrate, but we have the guiding tool. And the sequence of it, when it follows variation, will follow the Fibonacci variation of it. Yeah, I'm going to show you where it goes heading to now. BT is completely lost. What is the 220? The person is completely lost with me. The person is completely lost. So and the problem about me doing this on TradingView is that, right, I'm manually drawing the line. So my line, every time I draw, it might be differ by a bit. You know what I mean? It will differ a little bit here and there. So when differ here and there, right, when the line differ here and there, errors will appear on the system. That's why you need a more powerful software. But with this alone, you can really get a few vibration harmonics. So if I'm doing this now, right, and I'm cloning this area again here, I have a rough estimate is here, right? That's why I always say check the cycle. Is the cycle here accurate? It is. So yeah, it still is. So what I do to check cycles, I'll check based on the current pattern of behavior. If it still respects the line, it still respects the line, right? Then I know that the elements is still okay. But I think most of the class got it already. Yes. Can you see how accurate this is? Look at this. Is this an accident? No. Why do you think that day they pumped the Russian walls this day, right? Why did the Russian walls this day? They pump and drop. Why? Harmonics vibrations. That's how I zero in on dollars. When I said I did the time equals price business, this is time equals price. But this is the time equals price on the harmonics. So when I use the time factor trading method, when I have the line division of time, then I will know which day will be the price that I'm looking at. Get it? And why do you think this is a doji? You zoom in here. Let me ask you, why is this a doji? Why is this a doji here? The big boys, because of the war started, the big boys don't know what to do. Should we pump go higher or pump down or flush go down? They don't even know what to do. Because someone say, no, I want to pump. That's like I say, no, cannot. Okay, fine, let's decide. Let's wait for everyone to decide. They're using the harmonics of the markets that one I showed to you how to determine from TradingView right now on symmetrical systems to get the harmonics vibration of the markets. Do you think this is an accident? It's never an accident. How crazy is this? Right. So now I'm doing the other person. Yeah. I will show you guys how to find the 200. This is definitely more accurate than KC, like, come on. But this one you get very few trades. You get very few trades on this. You get very little trades, very little trades. But when you get this trade, it comes along the way, the odds of you getting the trade right, is insane. Okay, the person asked where to get 220, very simple. I find a mirror dimension of a length. I test this mirror dimension with a couple of them, and I use the Fibonacci to gauge the rough area of the length. If I like the length of the gauge of high and low, I will then use that as a mirror. And that's a vibration mirror. That's how I do it. It works on all time frame, but the lower time frame, the more distorted vibration is. I repeat, it works on all time frame, but the lower the time frame, the more distorted the vibration is because people, emotions and humans are still around. So you get very distorted. It's very deadly for bigger time frame. Correct. But it does work for lower time frame. This method I'm showing you right now is an investor strategies for the big guns. They don't really use this on the time factors for small time frame. There's even a time trading for small time frame. There is. Yes, Sean, we can. That's why I use Optima to do this. I don't want to use the TradingView. It irritates me. Because the harmonic cycle is the same. So all we need to do is very simple. Take this thing, clone this again, and push it here. right? See, lens here, okay, can. See, can you see the support of the harmonics? Can you see the support of the harmonics? It's valid. Okay, this one's a bit off already, but still valid. As long as like this, right, it's still okay. It's still valid. Right? We consider it's valid. It's a bit off, but valid. Right? Now we're reaching the current cycle, right? Now you guys are excited already. You're like, oh, we're about to reach the current cycle. Ooh, we're about to reach it there. Right? About to reach already. Okay. So let me adjust the thing. What is this? What is this? It couldn't break further. Cool. Now let's project forward. I'll do two cycles for you. Now you know why it went up, right? Now you know why it went up, right? I love your reactions. Fun? Fun? Apart from the Venus Jupiter thing, fun? Now I know why you meet me, right? It's not how many bars per cycle, it's the length of the bar. Because the bar cycles can any if I talk about time cycles bar, I had to do another formula already. This is why I don't use CCI anymore. This you have this thing, you need CCI for what? You get $1 and entry, you know. You get $1 entry, what more you need? What more you need? You know how accurate this is or not? My risk can be only this 34 points. Can be about $4 only. My returns can be as high as this. Find another formula that can do this kind of risk reward. My returns can be, my risk can be only how big is this? $3, $3.80. Okay, $4. My risk is $4. My returns on the upside is 231 R ratio. How much is that? And don't forget, it will go up. So if it goes up higher, right, it's not here. You'll probably end up here. You can go a bit higher. So, but just looking at this, my RR ratio. What's my RR ratio? Can you do the math for me, please? 231 divided by 4. What's the R ratio? What's this R ratio? 57 RR. How mad is that, the returns? 57. Understand now? Yes, but once you catch one or two, you're set for the whole year. Right? So You now know that if this line were to go, I'll do one more line for you. Right. Here. Here. Now, please take a photo of this, and you know what to do already. Please take a photo of this. Please take a screenshot. I was hesitant to teach this actually, to frank you. You can. The trick is to do the sub-dimension line, but not as accurate. Because the full harmonics is always the most accurate. You can do a sub-dimension and can do a counter dimension. So the one that I like to use is a 90 degrees angle. So this is what irritates me with TradingView, because they cannot scale lock it, right? I mean, you can scale lock it, but when you try to do the degree angle, it constantly changes. That's why I don't do this on TradingView. But what I will do is this: if I know that this is the dimension uptrend, and I lock the thing, right? So I teach you how to scale this further. Can I unlock the ratio, right? I lock it, right? Okay. I lock the ratio, right? Okay. Now I lock the ratio, right? Now what we need to do next to improve this further is that if you want to find a sub D in the vibration harmonics, you can. It will be what we do is that you find a dimension that you like to zoom down. Usually I use 90. Personally, I will use 90. So I will just take this line here. I'll take this line here. Let me just look for it for you. Yeah, irritating. That's why I don't like to use the trade. Okay, this line here, right? Then I'll try to find a place that I think that the dimension can fit. So let's say I try here, right? So if I like this dimension fitting zone, I'll make this in a box. So up, down, one zone down, I'll use this as the dimension zone box. Where is it? Where is it? Yeah, this one. All right, done. Okay, so this is the counter dimension. Counter dimension. What I show you next will also cue you guys further. If you think this is the end of it, no, this is the end of the magic show. I want to show you guys something else that will cue you further. Now we need to find the harmonics price. Okay, let's say I try the harmonics price here. Let's say I like this one. Okay, this distance looks good. Yep, it looks excellent. Good. So now what we need to do is you take this box here to here, right? You got it, the box, right? Change color. So we're not done yet. We're not done yet. We're not done yet. I'm about to show you something even crazier. Put it here. Here. That's a bit off, but okay, we can try. It's a bit off. Harmonics is still a bit off. I don't like it. I have to change these settings. Oh, yeah, it's actually working. It's working. It's working. It's working. It looks off, but it's working. No, I'm about to show you something that you scream and share after this. The magic show is not done yet. The magic show is not done yet. This is just part one. I'm just contemplating whether to show this to you or not. Usually, I want to reserve this for the full program. No, it's not. I'm just drawing lines. I think I need to increase my 7 days program price really. I can't believe I'm showing this on 7 days program. One year is about $600 $600 a year after that. I think 695 USD a year. Not my price. So with my discount, you get around $3,000 about $3,000 with Optima. I also pay the same price as well. So not only you guys, I also pay the same price. Even I'm using my own discount code. Okay. Ready to be mind blown further? You ready? Yeah, I'm going to move all these lines away because these lines are very important. I'll just show the answers later. Yeah, okay, do one more first. I'll do one projection first. Okay. Yeah, it's correct. It's correct. It's just the market buy. So they need to use a bigger stop loss than you. Oh, I love what I'm doing actually. It's every market is like a puzzle to me. It's very fun. I always play this thing. When you realize the markets are like a puzzle, right? You just laugh about it after that. Okay, crack. That's why I say I can crack almost any markets. It's whether on the crack or not. Okay, magic time. You notice that the markets, the one I just draw for you, there's something that interesting when I zoom out. Do you observe here? What do you see that? What would you do if you can see something like this in the market? What would you do? What would you do? What would you try to do next? What would you do if you are looking at this right now? I was just gonna see you guys think. What would you do? What do you think that you see a data point like this? Intersections, okay? Okay. No, I'm asking you to look at it general. I don't care about the current market. I know it's a buy. But what do you think you'll do? Somebody got it right, intersections. What about intersections? No one got an answer? Damn, disappointing. Can you see this intersection here? Watch this. Look at that. This is the M3. basic training view version. This is not a complicated one, but this is basic BM. This is basic technical entry. See here? Because the intersection is 2 days off. No, this is a sub entry. You look at the yellow box and look at the 2 lines. No, I said, as said, Steven still don't get it. It is damn obvious, really. Right? Most of you got it already. I know most of you got it already. This is an odd one, odd minus one. Cannot. This one failed. No, this is a fail. I show you already. You don't have to work ever again. You do my program. Majority of you got it already. I know majority of you got it already now. If you cannot understand this, you shouldn't be doing trading anymore. Okay, this one not this one is a very long trade, right? The cycle is very long. See, the cycle's already here, right? Some of you guys are getting very excited. You see the cycle here? It's very long, but it still worked till the end. I made it very obvious this time around, you know. I like you guys to wonder. Okay, what I'll do is that I won't tell the answer now, but some of you got it already. I'll let the rest of you who haven't got it wonder. Then I'll tell the answer next week. I want to squeeze your brain more. But some of you got it, and some of you who got it now, some of you who got it already, you're like, holy shit. I can see that. I can see the holy shit moment from your face already. And this is even in training view, correct? I'm not even using Optima to do this. One thing I issued BMM here that day. I was contemplating how to issue the BMM. See, we got whipsaw, right? See, sweet thing here. We got whipsaw here, right? Remember the whipsaw? The apology trade. That was a apology trade issue. That's why the market, the thing whipsaw. Now I understand why there's a whipsaw that day. I already done all this before in Optima already. I got all the data points in the future already. I told you I can do this for the next 2,000 years. Now you understand why I said I know the market for the next 2,000 years if I want to do it. This is video the news about market. So you want to read the news some more? You want to read the news some more? I said I don't look at news one. I don't need to. That's where you recalibrate. I'm not going to show you how to do it. You need to watch the recording. You miss it, too bad. I might do one more refresher next week for you about this. Then I'll show you how to do the Optima version. For those of you in the advanced program, I'll show you how to do the Optima version. And Optima is even crazier. You think it's crazy? No, you haven't seen crazy yet. This is the crazy but not crazy enough yet. So you understand why sometimes the BMM will mess up, right? If you see this area here like this, right? This is a mess up BMM. Can't help it. If the vibration is bad on the period, right? I can't do anything about it. Sometimes you get this stupid shit. So sometimes if I issue the BMM and it fails, it's not I want it to fail. You know what I mean? It's just that the cycles don't agree. It still work, right? If I extend a line here, for Sean, you get this right. If I extend a line here, you see this is the apology, right? There's an apology here, right? But in the end, did it work out in the end? It did. If this is a zone, then this becomes an apology. Can you see the apologies give you a one-to-one ratio? This is an apology that they give back to you. Can you see the apology now? That's why the apology trade is so important. Correct. So sometimes this happens, I cannot do anything. But the cycles are there. The vibration is there. The harmonics vibration is there. This is how they give you back the apology. So you not only have the line of guidance, you have the lines of, you not only have the lines of guidance today, right? You not only have the lines of guidance where you form the cycles on the spot. These are the lines of guardian, right? Where you do one end to another, like the pivot system. You also have the cross-section intersection of cycles on spots. You know where the cycles are? One of the basic ways of cycles. So you have two kinds of weapon now. You can do the line of guardian trading, where time equals price principle is there, or you can do the cross intersection strategy, or you can do both. It's up to you. But this way, you know how to predict the price and a little bit of time maybe. This is the basic time. The real time is not like this, right? The real one is even more complicated. Now you know why I told you guys to buy gold, right? I not even introduced you female energy in this, man. I not even introduced the female part of this yet. That is for the main program, not for this one. That one will kill. If I introduce that today, you kill all of you today already. I already blown the mind already. I said every day from now, from day 3 onwards, every lesson is a mind-blowing lesson. So some of you find 1 and 2 difficult already, but day 3 onwards is where it gets very difficult. Not day 7. Right? I don't introduce, and the female component in TradingView sucks. It's not even accurate. So I don't want to teach you something not accurate. Unless it's Optima, then I teach you Optima. Because Optima has a zeroing strategy. Optima can do zeroing. This one cannot. So here's a question. Do all of you have your TradingView now? And do you use my link to get it? TradingView. Do all of you have TradingView? Do you use my link? Okay. If you do that and you got a TradingView, well, good news. You know what I'm going to do for you next? Fuck, okay, I can export. How do you get this work out? Okay, I think just crash my system now. Holy shit. Ah, crap. I think just crashed my system. Okay, am I? I'll do something for you guys now. Well, have fun with it. I expect you guys to make money, okay? Do you know I just did? Now you got the same setting as me. All right, so get study it. Okay. Do you guys need a break? I'm thinking whether should I end today and since I let you guys rest and I want to master it. I don't think I want to introduce. I can introduce more strategies. There are more, but I don't think I want to introduce. Amanda, check your Telegram. Check your Telegram. I gave you guys the exact copy of it. All right. I want to end today on a high note. Right. And yes, I'm actually tired. So you know what to do already. To be frank, I'm actually very exhausted. I'm very exhausted right now. Right. So I'm gonna end today earlier a bit. Next week there'll be Saturday, Sunday. Anyway, your batch also got extra days, so I'm not so worried about it. So we're going to cover the rest of the stuff that we missed out next week. Right. There's still more stuff that we haven't do. Oh, yeah. Okay, fine. I'll show you one more thing before I go. I'll just briefly show it to you because I'm very tired to explain. Right. If you think this is cool, right, there's two more things I can do with this. Before I go, I'll teach you, I'll show you two more things. I'll show you next week. I'll show you a bit of it. I'll just show it next week instead. This is what I'm showing you now is partially BMM really. Bloody inaccurate yeah. So why is it inaccurate one? That's the thing. TradingView is very inaccurate with this. Okay. If you want to find a sub dimension point, right? Let's say you want to find a sub D. What you can do next is that you can actually find two cross section like this. Can you see here? When I cross intersect the thing, a third line appear. What I can do is you can copy this and find the sub energy of the market here. Can you see this thing here? Understand? Once again, correct. Right. If you think this is not complicated enough, there's one more level you can go on top for this method. Three more levels, but I'll just show you one more trick. So if you think there's a sub D, and you know there's a cross energy here, right? Let's say we took a cross energy here. Many ways, man. many ways, Alex. Many more ways. Let your creative energy shine. Can you see why there's a support structure here? Can you see why there's a support structure here now? Right. Then last one before I call it 1, 2 dimension X. 1x, 2x, 1x, 1, 2. Where should I take dimension point measurement? Oh shit. Okay, got it. Now, do you understand why the market behave in a certain way, highs and lows? Can you see all the hidden angles? Can you see all the hidden angles? Can you see all the hidden angles, high and low, in between the cycles? Can you see all the triple cycles and triple cycle energy? Can you see why there's a red zone here? And we did from an empty space. You don't even need a chart point. I can just take an empty space in the chart and it will make sense. Understand? Right? Have fun digesting this. Okay? Is there another way to do this further? Yes. This is what XT. 1, 2, 3, 4. One is there it makes sense really. Correct. Now you understand why we have this thing here? Now you understand why? Now you understand why there's a baseline of analysis here? No, I'm too tired. I'm too tired already. I'm drained, to be frank. Okay, the sub D not very good. I'll cover the theme next week. Where's that one's not that's not clean. I need a parallel. Oh, I know why already. Parallel is not right. Yeah. That explains why. Wait, I'm just processing the dimension. Where's the point angle, subpoint angle, subpoint up, subpoint angle. Okay. So if I'm thinking how to do it right, how to do the thing, because when I did it's very funny, so I didn't like it. No, there's no script to this. That's why I'm having problems trying to find it. There it is. Yeah, found it. Okay, I'm not going to teach this advanced method. This is for the 14 days one. But I just want to observe, because from this thing I can generate another strategy on top. Right. But I just want to observe that when we have, I'm only saving this for the 14 days. But when I just want to observe the behavior, right? Correct. Where's my counterbalance? Okay, it's a bit off. I don't know why it's a bit off. Yeah, okay, the setting here is a little bit off. I don't know why. I think that it's trading view the scaling issue. Because when I realign the things, it's a bit off the thing. If it's on right, it'll be exactly pointing on all the okay, it's correct, correct. So it's not very clean, but you can see that there's a dimension line here. You can see there's a dimension line here, right? Dimension line here, this part here. So this one way I know that this is still okay, but it's not the best because these are cross dimension harmonics. So this line right tends to actually show the harmonics of the real trend. When you want to differentiate between what's a good turning point and not so good, the GAN will tell you where it's a powerful one. That's one of the ways to sieve it out. But then it gets very subjective when you do this method. Very subjective. And when you do the cross GAN, right, like here, right, you see here, this is correct, right? Sometimes it works very well, sometimes it will be off by a bit. Because there's inaccuracy variation in my calculation because I'm doing manual. So when I do it on training on Optima, right, it's very clean. You know what I mean? So anyway, this is one of the things, because if it's nice, right, this thing will align very, very perfectly alignment. The alignment very, very pretty. Right? So this is another way. You can see like yin and yang like that, my stuff. This is the right one. Yep, should be correct. Yep, should be correct. 1, 2. This is one, or is that this one? This one, this one. No. Right. Okay. I'm going to stop. Okay. I'm going to stop now. So I'll see you all next week instead. Have a good rest, good dinner, whatever it is. Right. Obviously today there's no long break, and use some days to try to end earlier. Right. So technically it's about an hour earlier or less. Yes, next Saturday. All right. Any questions? Anything else you want to know? Remember, if you want to scalp, use KC scalp first. The current scalping, the current scalping strategy for KC. Yeah, all this will be all next week. Next week, all next week. Right. Next week. So you can use your KC scalp first. So make sure all of you have your trading view, or not the Trade Nation account through me, right? Or the CMC account through me, right? You can start using that to play now already. Right? You can actually start real money or start demo first. Just don't hold back. Now, whatever teaching you, you're fresh. Just make sure they use a small amount. If you're not confident, use a small amount, right? Don't blow up the account. Please don't blow the account up. Okay? It's all good. It's all good. I'm going to go KO already. All right? See ya.